Hello and welcome everyone. This is Professor Siddharth Surana. I hope you guys are doing good और मैं तो हमेशा मस्ती रहता हूँ. Welcome to episode number 3 of revision cum amendment lectures in direct tax for May 23 and November 23. Exams lectures are for CA final, but for the common topics, even the CA intermediate students should be watching these lectures. We are done with the first 7 chapters from our book Exemption 3.0. Oh, let's go ahead. Next chapter, special provisions for assessment of business trust. Business trust will be of two types. We will have something called REIT, that is real estate investment trust. They are going to make investment in companies which are in real estate business, as the name indicates, REIT, and InvIT, that is infrastructure investment trust. They will make investment obviously in companies under infrastructure business. So REIT is going to take money from people, allot them units, so the owners will be called unit holders and make investment in real estate companies, and InvIT will take money from investors and allot them units and they will be called unit holders, and with the money InvIT will invest in infrastructure companies, and both have to register under the respective regulations laid down by SEBI. Together REIT and InvIT together are known as business trust. The tax treatment of REIT and InvIT is same, which is why we learn them together as one chapter called assessment of business trust. When the business trust, whether in the form of REIT or InvIT, is making investment in company, REIT in real estate and InvIT in infrastructure company, sometimes the business trust may end up holding controlling interest in the company. In that case, the company will be called SPV, special purpose vehicle. So business trust is not SPV. The company in which the business trust has acquired controlling interest. See, it is the option of the REIT or the InvIT, that is the business trust, to take 1 share, 2 share, 5 shares or all the shares. If they take limited shares, then it's a normal infrastructure or real estate company in which the business trust has made investment. But if they acquire control of the company, then the company will be called special purpose vehicle. In other words, when we make investment in this company, obviously it can be in the form of equity or debt. So we will be getting debenture and interest, that is debenture and interest which the business trust is earning from SPV. Apart from that, the business trust can make minor investment in the companies also, then that will be dividend and interest from non-SPV. Effectively, business trust is going to earn dividend and interest income from SPV and non-SPV. Dividend from SPV, interest from SPV, and both incomes from non-SPV also. Furthermore, a real estate investment trust can purchase own property, so it can earn rental income also. So there is tax treatment of rent given for REIT, and then when all these assets are sold, there will be capital gain. So there is capital gain treatment also. These are the incomes for which we have to learn the tax treatment. Starting with a very simple rule which is given in section 10. Section 10, as we are all aware, means exempt income. When a business trust is earning interest or dividend from special purpose vehicle from this company where we have taken controlling interest, so that is going to be exempt. And when the REIT is earning rental income, so that is going to be exempt. Effectively, you can say the simple tax treatment is 3 incomes of a business trust will be exempt. 3 incomes exempt, everything else taxable. 3 incomes exempt, everything else taxable. What are the 3 incomes that will be exempt? Interest from SPV, dividend from SPV, and rent, which means interest and dividend from non-SPV will be taxable. So interest and dividend only from SPV will be exempt, non-SPV will be taxable, rental income will be exempt, and capital gains in all forms will be taxable. Interest and dividend from SPV is exempt, and rental income from the real estate property is also exempt. As a clarification, non-SPV interest and dividend is going to be taxable, How? Interest, they are going to be taxable in the hands of obviously the business trust. And as far as these 3 incomes which are exempt for the business trust, which 3 incomes? Interest from SPV, dividend from SPV, and rent. Because the business trust is not paying tax, we will take tax on these incomes for the unit holders. So first, we will not talk about tax treatment of the unit holders. First, let us talk about the tax treatment of the business trust. What are the 3 incomes that are exempt? Interest from SPV, dividend from SPV, and rent. That means all other income, including non-SPV interest and dividend, will be taxable. Only these 3 incomes are exempt for business trust and therefore taxable for the unit holder. But everything else includes the non-SPV dividend and interest, all the capital gains, everything is going to be taxable for the business trust. Everything will be taxable for the business trust. So let's complete the business trust part. Except 3, everything taxable. Except 3, everything taxable. Which 3? And those 3 are taxable for unit holders. These 3, which 3? Dividend and interest from SPV and rental income. Everything else will be taxable at maximum marginal rate MMR. How is MMR calculated? Highest basic 30%, highest surcharge 37%, and highest cess 4%, effectively 42.744%. However, this other income can include incomes taxable under 111A or 112, so you can take the respective benefits of those special rates. And of course, because all the other incomes have been already taxed for the business trust, they will be exempt for the unit holders. In other words, you can simply say total income of business trust will be divided in two parts. Incomes on which the unit holder will pay tax, that means business trust ke liye it will be exempt. These are only three incomes, these three incomes, and everything else, unit holders, it will be exempt because business trust is paying tax. Paying tax at what rate? Maximum marginal rate, but it can take the benefit of 111A and 112. And now that we talk about the three incomes which are taxable for the unit holders. Which three? Interest and dividend, both from SPV and rental income. So at what rate they will be taxable? What rate they will be taxable? Interest, dividend, and rental income. As far as resident is concerned, all of them will be taxed at normal rates. There is no special rate prescribed. But for non-resident, now you can go and revise the 115A section where we studied that non-resident earning interest from business trust. Normally, interest income is taxable at 20, but business trust ka interest income is taxable at 5. Likewise, normally dividend income for non-resident is taxable at 20, but business trust ka dividend is taxable at 10. So, interest from business trust 5%, dividend from business trust 10% for non-resident. Resident, everything normal rate. And of course, the rental income will be taxable at applicable rate because special rate is prescribed only for interest income and dividend income. Likewise, because the incomes are taxable for the recipient, the business trust will have to deduct TDS. For a resident payee, the resident unit holder, a flat rate of 10% is given. It can be more than the liability or less than the liability. We will adjust by way of refund or self-assessment tax. But for the non-resident, as we are aware, tax equal to TDS, TDS equal to tax. So, what is the tax rate on interest? 5%, same as the TDS rate. Tax rate on dividend 10%, same as the TDS rate. And tax rate for rental income applicable rate same. Plus for non-resident, surcharge and HEC will be added because full tax covers surcharge and HEC also. So in effect, for non-resident unit holders, the three incomes will be taxable at their respective rates and same will be the rate of TDS. For resident unit holders, everything will be taxable at normal rate and flat rate of 10% TDS is going to be applicable. But a very, very important line that you have to note, that the SPV dividend which we are making taxable, you are at normal rate and you are at 10%. Dividend income from SPV, business trust will get the dividend, but it will not pay tax because it is taxable for the unit holder. It is taxable only if the SPV has opted for the new taxation regime 115BAA. Means the company in which business trust acquired controlling interest was called special purpose vehicle. This company will be paying dividend to business trust. Business trust will never pay tax, never pay tax, never pay tax, never pay tax, never pay tax. Who will pay tax, if at all? Unit holder. But when? Only when this company is in the new regime. If this company is in the new regime, that means it is paying lower rate of tax. So let's tax the unit holder on the dividend. But if this company is in the old regime, that means already we are applying a higher rate of tax. Then in that case, the dividend income will not be taxable even for the unit holder. Business trust anyways is not going to pay tax. But unit holder also will not pay tax if the company is in the old regime. The dividend income for unit holder, business trust never taxable. Unit holder taxable only if the SPV has opted for the new taxation regime. And finally, one fine day, the unit holder will be selling the units that he has acquired. The units that are sold will obviously attract capital gains. Capital gain is going to be applicable for the units that are being transferred. So there are two ways in which the unit holder can acquire the unit. One way is that you purchase from the market. So your actual purchase price is going to be the purchase price, means selling price actual, purchase price actual, and actual capital gain. But there is one more way in which you can become the unit holder. Supposingly you were shareholder in the company and the business trust wants to acquire control and want to make your company SPV. So they will take away your shares and in return give you units. So these units were not purchased from the market. These units were received as purchase consideration from the company. Correct or no? At the time of exchange, it is not a taxable transfer. So there is no capital gain when you are exchanging. But subsequently when you sell the units, there will be capital gain. Selling price again actual. And here in cost of acquisition, we will be taking the cost of shares. Similar to amalgamation. From selling price of new company shares, we take deduction of old company's cost of acquisition. So cost of shares will be subtracted from selling price of unit, and the resulting capital gains, if it is long term, you can take the benefit of 112A. If it is short term, you can take the benefit of 111A. If the units were received in exchange of shares, the COA will be the cost of shares. So unit purchased from the market, actual purchase price, but received in exchange, then cost of shares. If the units are listed, then only STT will apply and these provisions can apply. But if the units are unlisted, then in that case 111A and 112A cannot apply and normal capital gains will apply, because 111A and 112A come with the condition that STT has to be paid. So on unlisted there will be no STT, only on the sale transaction. Purchase has to suffer STT only in long term, only in equity shares, only after 110/2000. So if they are unlisted, there will be no STT on sale, and accordingly normal provisions of capital gains will apply. If they are listed, then only 111 and 112A will apply, and for every business trust, filing of income tax return is going to be mandatory. That was our chapter number 8, that is assessment of business trust. Let's go ahead. Next chapter that we have in our revision is special provisions for tax treatment of investment fund. The concept is going to be somewhat similar. The investor will invest money in the investment fund. In return, he will be getting units. Therefore, the investor can become, you can call him the unit holder. And now investment fund will make investment in the company in the form of shares. It can buy debentures. It can have its own business also. There can be investment fund which is flooded with funds and it can have its own business. Obviously, then dividend income, interest income or PGBP income is going to be arising. So the activity of business trust is also like that only. This is like a mutual fund. Take money from people, invest in the market, earn profits from the market and distribute to our investors. But business trust is industry oriented, only real estate and investment real estate and infrastructure industry. Okay, and here there is no definition of industry, it is open ended, so it can be investment in any industry. Tax treatment is very, very simple. If the income is PGBP, see, investment fund can start its own business, it can take money from people, start its own school, own hospital. Schools and hospitals are bigger businesses than actual businesses these days, correct or no? So PGBP will be taxable for the investment fund. If the investment fund is registered as a company or firm, then as per the applicable rate, and if it is any other case like an AOP or something, so maximum marginal rate. This is the only income that will be taxable for the investment fund, and because the investment fund has paid tax, obviously for the unit holder it is going to be exempt. So investment fund will pay tax on PGBP, unit holder will get it as exempt, and all other incomes, whether dividend income, interest income, capital income, IFOS, capital gain and everything else, anything other than PGBP, investment fund will not pay tax. And because investment fund will not pay tax, then obviously unit holder will pay tax. So once again, we take the total income of the investment fund and divide in two parts. Like in business trust, what did we do? 3 incomes, other incomes, 3 incomes, other incomes. 3 incomes, dividend and interest from SPV and rent, taxable for unit holder, exempt for business trust. All other incomes, taxable for business trust, exempt for unit holder. Here also we make a similar bifurcation. 1 income, other incomes, 1 income, other income, PGBP other, PGBP other, PGBP other. PGBP taxable for the investment fund and exempt for the unit holders, and other income taxable for the unit holder and exempt for the investment fund. Because the other income is taxable for the unit holder, obviously the investment fund will have to be deducting TDS. For a resident, we will always keep a flat rate, and for a non-resident as per the applicable rates. The income that will be taxable in the hands of the unit holder will be treated in the same nature and same proportion as it is earned by the investment fund. Sir, what do you mean by this? Supposingly the investment fund has got 4 lakh PGBP to that. The investment fund itself has to pay tax. Supposingly investment fund has 5 lakh capital gains. Who will pay tax? Unit holders. All other incomes, unit holders. This 5 lakh will be treated as income of unit holders under capital gain, same nature and same proportion. Sir, same proportion means what? When we have to make the unit holders pay tax on 5 lakh capital gains, go check how many unit holders, supposingly 10 equal. So every unit holder will offer 50,000 capital gains. Supposingly they had 2 lakh IFOS also. So again we will make the unit holder pay tax 20,000 each. 50,000 under capital gain, 20,000 under IFOS. Same nature, same proportion. Same nature, same proportion. So PGBP will be taxed in the hands of investment fund and all other income will be taxable in the hands of unit holder. But the main difference between business trust chapter and investment fund chapter is, under business trust we were taking tax on 3 incomes for unit holders. Dividend from SPV only if SPV is in new regime, interest from SPV and rental income only when the money is distributed to the unit holders, only in proportion of that distribution. Only on the distribution we make the unit holder pay tax. But under investment fund chapter, the income will be taxable for the unit holder whether it is distributed or not distributed, and this is popularly known as something called pass through. Means the moment the investment fund earns that income, immediately you can say that unit holder has to pay tax on income other than PGBP, whether distributed or not distributed. It is like company has earned profit, but shareholder has to pay tax on those profits other than PGBP, whether the dividend is distributed or not distributed. That is known as pass through. In business trust, unit holder pays tax on 3 incomes only if distributed, but here unit holder pays tax on all incomes other than PGBP, whether distributed or not distributed. What about losses? Once upon a time, that is till previous year 18-19, loss was not allowed to be passed through. So if there is capital gain or IFOS, then we make the unit holder pay tax. But if it is capital loss or IFOS ka loss, so set off will be done by the investment fund. In case of insufficient profit, for example, capital loss can be adjusted only against capital gains. In case of insufficient profits, carry forward will be done by the investment fund. Means all set off and carry forward, everything was done at the fund level. The fund will carry forward. One day it will adjust the losses. After adjusting the losses, if there are remaining profits, so PGBP investment fund will pay tax, and other income we will make the unit holder pay tax. But the set off and carry forward will be done by the investment fund. Means understand what is happening. If there is 5 lakh capital gain, make the unit holders pay tax immediately, whether distributed or not distributed. But if there is 5 lakh capital loss, that will not be passed. Fund will keep it. Now capital loss cannot be adjusted against anything else. So fund will only carry forward. Next year there is 6 lakh capital gains. So first adjust brought forward 5 lakh. Usme bhi there is rule. Short term loss can be adjusted against both gains, but long term loss only against long term gains. You should know the set of chapter for all these rules. Adjust the loss brought forward, you are left with 1 lakh ka profit that you pass through. Means loss will remain with the fund, profit will pass through. Other than PGBP, of course. So unit holders raised an objection, sir, if we have profit, you are making us pay tax immediately. So loss ka benefit also we should get, and thus with effect from previous year 1920, that is assessment year 2021, 3 years ago, the rule was changed. If the loss is incurred in the current year loss, then first you have to set off. No, dekho, carry forward is not the first activity ever. First activity is always set off. First activity is always set off. When one loss is adjusted against another profit of the same year, that will be done by the investment fund. Because investment fund will be checking which loss can be adjusted against which profit, etc. Set off. After setting off, we will see that whatever are the profits remaining, PGBP investment fund will pay tax and other incomes pass through. But set off will be done by the investment fund. But in case the losses could not be set off, then we have to carry forward. Here is where the change took place, that PGBP loss will be carried forward by investment fund. Logical enough, because profit is also taxable for the investment fund. PGBP losses will be carried forward by the investment fund, but the other losses we will pass through. So other profits are we doing pass through? Other losses will also pass through, but only for carry forward purposes. Set off who will do? Investment fund. Carry forward ke liye we will pass through with a rule that the unit holder should have held the unit for more than 12 months. Otherwise, he will also not get it. The losses will lapse. In effect, now what is the rule? Find out the current year income. If only profits are there, investment fund will pay tax on PGBP and other incomes pass through. Make the unit holder pay tax in proportion of their unit holding, whether distributed or not distributed. But if there are any losses, first adjust them. Inter-source, inter-head. Fund will do that. After adjustment, if all losses are eliminated, only profits are remaining. So again, PGBP investment fund will pay tax. Other incomes pass through. But if there are losses remaining for carry forward, for example, something like capital loss cannot be adjusted against anything. So we have to carry forward. So what to do? PGBP losses will be carried forward by investment fund and other losses will be carried forward by the unit holder, but only if the unit was held for more than 12 months. Otherwise, the losses will lapse. And further, this rule changed suddenly on 31st March 19 after 18-19 from 1920. So it is likely that there were accumulated losses that were being carried forward. See, loss of 16, 17, 17, 18, 18, 19. Who was doing carry forward earlier? Investment fund. If there was capital loss, 3 years carry forward done by investment fund, because earlier everything was being carried forward by the investment fund. Earlier everything was being carried forward by the investment fund. So who has all the accumulated losses? The investment fund. No problem. The PGBP losses you can continue to carry forward, because anyways in the current year also you are carrying forward. Anyways, PGBP you are paying tax. But the other losses we will pass through. That means the balance period. See, 3 years example, 3 years you have already carried forward capital losses, the fund. So now for the remaining period of 5 years, you give it as pass through for unit holders, and here that 12 months ka rule is not applicable because these are past losses that we are carrying forward. We have only changed the rule. In other words, the accumulated losses as on 31st March 19 will be split. PGBP investment fund can continue, and the other losses for the remaining period. You won't get a fresh period of 8 years. For the remaining period, we will give it to the unit holders, and filing of return is also mandatory for investment fund. Investment fund also has to make a statement and give it to the unit holders that based on our income in the current year, this is what will be taxed in your hands based on your proportion of holding. On the proportion of holding, they have to pay tax, no? So that statement fund will only make, and I think now to it will come in your AIS TIS statement also. So that was our chapter, assessment of investment fund, chapter number 9. Let's go ahead. Next chapter, bonus stripping. Very small chapter, but still there is an amendment. Amendment, if I have to tell you in advance, till last year this chapter was applicable only on bonus units, and now it will apply on all securities. So if you get bonus shares or any bonus debentures or anything, bonus stripping transaction is going to be applicable. The short change that has taken place in this chapter is that the word units will be replaced with securities. So whenever a person buys or acquires any units within a period of 3 months prior to the record date, and now instead of units we will say securities, any securities within a period of 3 months prior to the record date, and sells or transfers within 9 months from the record date. So purchased within 3 months before the record date and sold within 9 months after the record date. So the record date on which you are getting allotment of bonus, if there is any loss on original units, then the loss arising on original units, everywhere we will remove the word units and replace it with securities. The loss on original securities shall be ignored, and it will become cost of acquisition of the balance bonus unit. So if you have purchased the security within 3 months before the record date and sold the security within 9 months after the record date, so purchase will be higher than market price, sale will be lower than market price, there will be loss, but in return you have got the bonus. So the loss on original will be ignored and it will become cost of acquisition of the bonus. Till last year this was applicable only and only on units, but now it is going to be applicable on all securities, units or shares or anything. Any bonus received, bonus stripping transaction subject to the condition 3 months, 9 months, etc. It is going to be applicable. Very small chapter, but still there is an amendment. That was our chapter, bonus stripping. Now we enter the very important part of our volume 1. The last 6 chapters, as you are aware, assessment of various entities are very important because we have partnership form, we have charitable trust which has had huge number of amendments, we also have political party electoral trust which are small chapters, but then minimum alternate tax, again MAT and AMT again become big chapters. So assessment of partnership form, what I will do is the full chapter I will revise from the PDF like I am doing, but that all important and complicated provision of excuse me, all important and complicated provision of 45(4), the chaotic provision, first 9B, then 45(4), gain as per books, gain as per tax. What I will do is that part, like we did in last year's revision lecture also, we will take that part directly from our full course lecture. That part is not something that can only be revised, it requires detailed explanation. That small part will be taken from that video, with the added advantage that you also get to know how our full course lectures are conducted with everything being written in class and detailed explanation. You will also get an idea about how revision lectures or crash course lectures are different from the full course lectures, how we go into the depth of everything. So you'll get that idea also. So I will finish everything except 45(4) from the PDF. We are doing assessment of partnership form. Every time we talk about form, we also cover LLP. So therefore we will be covering Indian Partnership Act के अंदर registered any partnership form और LLP Act के अंदर registered any LLP. First, what is the tax rate? Whether firm, LLP, in fact same rates are for local authority. In introduction chapter we don't cover tax rates of firm, local authority and company because firms का we do in this chapter and company का we will do in MAT chapter. Basic tax, flat rate 30%, no basic exemption, no slabs, no old regime, no new regime. Very simple. Please don't tell this to auntie, otherwise she will complicate this also. Please don't tell this to her. That there is only one rate, no old regime, no new regime, no basic exemption, no slabs. Every rupee will be taxable at a flat rate of 30%. 100 rupees income, 30 rupees tax, 10 rupees income, 3 rupees tax, 1 rupee income, 30 paisa tax. Every rupee will be taxed at a flat rate of 30%. Surcharge will come only if the income exceeds 1 crore. Only one pure simple rate of surcharge. So 0 to 1 crore, no surcharge. More than 1 crore, 12% surcharge till infinity. Whether the income is 10 crore, 50 crore, 100 crore, 1000 crore, 10,000 crore, 12% surcharge. And health and education cess will be applicable at 4%. No rebate, of course, because rebate is only for individuals. Very, very basic. The tax rates 30%, flat rate, 12% surcharge only if income has exceeded 1 crore and 4% HEC. How will a firm ka residential status be determined? If the control and management is wholly in India, obviously resident, wholly outside India, obviously non-resident, partly in India and partly outside India, still it will be treated as resident only. Firm ka classification is only into resident and non-resident. There is no further classification into ROR or RNOR or anything of that sort. Next. A partnership firm will be paying the following incomes like salary, bonus, commission, etc. All this can be covered in one word, that is remuneration. For providing funds, partner will get interest. These incomes will be taxable in the hands of the partner under PGBP. Even salary will be taxed under PGBP because he is not an employee. But obviously only to the extent the firm gets deduction under 40B. Firm will pay deduction, firm will take deduction, partner will pay tax. Firm will take deduction, partner will pay tax, and partner will pay tax under PGBP first only on the amount that was allowed as a deduction to the firm. So anything that was disallowed to the firm, it will not be taxable for the partner. So these incomes, firm will take deduction within the limit of 40B, remuneration and interest ka limit, and only that much will be taxable for the partner under PGBP. But the share of profit is going to be taxable for the firm, and because it is taxable for the firm, it will be exempt for the partner. So remuneration and interest, firm will take deduction within 40B limit, partner will pay tax only on the amount of deduction given to the firm, and share of profit, firm will pay tax, and therefore for the partner it is going to be exempt. Next, a very, very important thing, the only place of difference in tax treatment between normal firm and LLP, otherwise everywhere firms and LLP are at par. 44 AD presumptive taxation for business and 44 ADA presumptive taxation for profession. Presumptive taxation, very important sections of PGBP, we have quite a few case study based MCQ on them, are available first of all only to resident firms. Matlab non-resident firms disqualified. Of course, individual HUF are also there, but this chapter is only about learning tax provisions of firms. So only for resident firms, but a very, very important provision excluding LLP. Be very careful. There are plenty of MCQ case study based questions on this. 4 firms are given. You have to choose who of them are eligible for presumptive taxation. In that, LLP is disqualified. Only place of difference between normal firm and LLP, LLP, normal firm and LLP, that presumptive taxation is not going to be allowed to LLP, and normal firm also only if it is resident. Only normal firm, only resident. LLP not allowed even if resident. The only place of difference between normal firm and LLP. 9B I will explain here, but knowledge of 9B is also required for 45.4. That is going to be taken from the full course lecture, as I have already told you. Whenever there is transfer of 2 assets, capital asset or stock in trade, 2 assets, by whom? 2 assessees, firm or AOP. To whom? To partner or member respectively. Obviously, firm will be transferring asset to partner and AOP will be transferring to member. So, 2 assets, capital asset or stock in trade. 2 transferors, firm or AOP. 2 transferees, partner and member respectively. Upon dissolution, dissolution we all know, closing of the business or reconstitution of business. Sir, what do you mean by reconstitution? Change in constitution, change in profit sharing ratio is reconstitution. Admission of partner is reconstitution. Retirement of partner in a way that at least one old partner continues. And death cases ke liye we have case laws, as you are aware. So, change in profit sharing, admission or retirement, at least one old partner should continue. That is change in constitution. So, 2 assets, capital asset, stock in trade. 2 transferors, firm or AOP. 2 transferees, that is partner, member respectively, or 2 occasions, dissolution and reconstitution, will give rise to capital gain and PGBP respectively. Obviously, if the asset is capital asset, to capital gain, and stock in trade, to PGBP will give rise to capital gain and PGBP respectively in the year of transfer. And for this, the FMV of the asset transferred shall be considered as sale consideration in the hands of the AOP BOI. The FMV of the asset transferred shall be considered as sale consideration in the hands of the firm or the AOP BOI. If required, CBDT will lay down certain guidelines, and reconstitution ka meaning I have already told you. So, whether a quick recap, because this 9B ka recap is necessary for understanding 45.4. 2 assets, capital asset, stock in trade. 2 transferors, firm or AOP. 2 transferees, partner or member respectively. 2 occasions, dissolution and reconstitution. 2 heads of income, obviously if it is capital asset to capital gain, and if it is stock in trade to PGBP, and the FMV of this asset will be taken as selling price for capital gain or PGBP respectively. That's the provision of 9b. No 9b have 9b ka knowledge properly, because that is going to also help you for 45.4, which we have to learn in detail. But before we go to the 45.4 ka detail, first let's learn the other concepts. As I told you that I'll finish the full chapter 45.4 last mein I will connect with the full course ka lecture. When a partner is transferring capital asset to the firm, generally he will contribute as capital contribution. 45.4 is firm transferring asset, but 45.3 is what? Partner transferring asset. 9b was also what? Firm is transferring to partner or AOP to member. Firm to partner or AOP to member. What is 45.4? That same. So what is the confusion? That we will remove. We will do it properly. But 45.3 is a different transaction. Here the partner is transferring to the firm. That means capital gain will come to the partner, because firm will pass an entry. Asset account debit to partner's capital account. It is like the partner has sold the asset to the firm, and for the partner we will be taking capital gain, where cost is very easy, actual cost of acquisition. But what will be taken as sale consideration for the partner to compute capital gains under 45.3? The value recorded, that is the actual agreed value, ignoring the fair market value. Firm will be passing an entry, no? Asset account debit to partner's capital. That actual value, ignoring the fair market value, will be taken as selling price for the partner. So whenever partner transfers asset to the firm, agreed value. Here we saw firm transferring asset to the partner. Here they tell you that take fair market value. Same is the case of 45.4. Firm is transferring to partner. But in 45.3, when partner is transferring to the firm, at that time we will be taking the agreed value, that is the value recorded. 45.4 with all the complications we will be doing at the end, as I already told you, all the steps that way I have explained here only, but detailed explanation will be done. Next, 111A for short-term capital gain and 112A special rates are applicable to firm. This is given as a clarification so that you don't have confusion. Sir, every income 30%, every income 30%. If there is special rate is going to be applicable. For your normal income, it is going to be 30%. Next, losses of a partnership firm other than unabsorbed depreciation that are attributable to the outgoing partner. If there is an outgoing partner, then uska share of losses cannot be carried forward by the firm also and the partner in the individual capacity. For the firm, it will not be carried forward because partner is going, that means that share is going away. And for the partner, it is not allowed because, simple, if you have profit in this firm, so it is exempt, no? So losses also you don't get, because if profit is exempt, no benefit of loss. So whenever a partner is leaving the firm, uska share of losses will not be carried forward, but UAD will be allowed because only the partner is going, the asset is with the firm only. So loss of an outgoing partner other than unabsorbed depreciation, firm will not get carry forward. Next, section 184. You want to call yourself a firm, then you need to fulfill 3 conditions. Otherwise, you will not be treated as a firm. We will see what will happen otherwise. But first, conditions to be satisfied in order to be assessed as a partnership firm. Condition 1, you need to have a partnership deed in writing. Condition 2, the partnership deed should be mentioning the manner, that is the basis of profit sharing. It can be in ratio, percentage or fixed amount, but that should be a manner. And a copy of deed has to be given to the partners along with the first return. Copy of deed has to be given to the income tax department along with the first return of income. And if a change in constitution takes place, then you have to give in the year of change also. So deed in writing, manner of sharing profit, and copy of deed to the department. If you fulfill 3 conditions, then only income tax will recognize as a firm. But if you don't fulfill the condition, you are still a firm. क्या ये बिक गई है गवर्नमेंट, ये सारे मिलके हमको पागल बना रहे. If you don't fulfill the conditions, you are still a firm, but you will not get any 40B deduction. So may I put it this way, that therefore these conditions have to be fulfilled not for the purpose of being a firm, but for the purpose of getting 40B deduction. For all other purposes, you are a firm only. For rate of tax purposes, for 45.3 purposes, yeah, 9B purposes, everything else you are a firm, but 40B deduction will not be given. And obviously, if the firm is not getting deduction, so partner ke liye nothing will be taxable, because partner pays tax only when firm takes deduction. So fulfill 3 conditions, then you are a firm. Don't fulfill, so you are still a firm, but you will not get 40B deduction. That means firm will pay tax on the remuneration and interest without any deduction. Next concept, change in constitution, as already discussed. Admission or retirement, at least one old partner continues, or change in profit sharing ratio, it is treated as the same firm, so there will be one assessment. But in case of succession, when a partnership firm carrying on a business is succeeded in a situation which is not covered, you can say all the partners are new. So then they will be treated as 2 different firms, and 2 assessments will be done, one on the old firm, one on the new firm. So change in constitution may it is treated as same firm, but succession may it is treated as a different firm. But for death cases, we have Supreme Court judgments. Supreme Court in case of Empire Estate and Iyer Narappan and Company said that if the deed is silent about death, what will happen in case of death? Then it will be treated as compulsory dissolution and it will go in succession. And Allahabad High Court in case of Paramount Trading Corporation said that if the deed contains a clause of continuation, we mention in the deed that in the event that any of the partner dies, we will continue the business by paying his legal heir the share of the deceased partner, then it will be treated as change in constitution. So in death cases, if the deed is silent, then it is compulsory dissolution, so succession. And if the deed mentions continuation, then in that case, it will be treated as change in constitution. Accordingly, we will decide whether to treat as same firm or different firm. In case of firm or LLP, whose liability to make tax payment, any tax, interest, penalty, any other sum payable under the act, the partners will be jointly and severally liable. Means we can recover entire tax from one person. Everyone is jointly and severally fully liable for the entire tax liability. And if there is any deceased partner, obviously from the legal heir or legal representative. But of course, we will never make him pay anything from the own pocket. The liability of legal heir will be restricted to the amount of inheritance. So, whose liability? Partner. Which partner? Joint and several. Deceased partner, legal heir, maximum liability to the extent of inheritance. What if the firm has undergone dissolution? Even if the firm has undergone dissolution, for any pending proceeding or fresh proceeding, the dissolved firm will be deemed to be in existence and accordingly we will apply the same rule. See, you may do dissolution overnight, that may be your choice. But for all your recoveries, the dissolved firm will be deemed to be in existence. The dissolved firm will be deemed to be in existence. Okay. Next, in case of LLP, do we have joint and several liability? Yes, very much. Yes, we do have same joint and several, deceased partner, legal heir, maximum liability, inheritance. But in case of LLP, if the partner proves that non-recovery is not due to his negligence, breach of duty or misconduct, then he will be absolved. This facility is only given to LLP ka partner, not given to partner of normal firm, because what's the point of opening LLP in that case? Okay, so normal firm ka partner does not have this facility. LLP ka partner, if he proves that it was not my fault, then he will be absolved of joint and several. Matlab aisa nahi hai that he does not have joint and several. Is partner of LLP also having joint and several liability? Of course. But if he proves that, sir, it was not my fault, then he will be absolved. Between the firms, there is only one difference, presumptive taxation. This is the difference between the partners of firm and partners of LLP, that the facility is available to partner of LLP, not to partner of normal firm. In case any new income is received after dissolution, then that will be taxable in the hands of the receiving partner under income from other sources, because now the firm is not in existence. Don't bring this logic into picture. Sir, dissolved firm will be deemed to be in existence. Dissolved firm is deemed to be in existence only for settling the outstanding taxes. Any tax already decided. A new income cannot arise to a dissolved firm. New income will be taxable in the hands of receiving partner. That also IFOS, because there is no PGBP anymore. So, after dissolution, in the hands of receiving partner under IFOS. Next, if the firm has undergone dissolution, two possibilities. Business discontinued, very simple, yes, dissolution to business discontinued. Sir, how can business be continued? Possible. Firm converted into company, or succession, or firm converted into proprietorship. Business can be continued also. So, here in case of Shakti Trading Company, Supreme Court said that follow the normal accounting method. If you stop your business, then NRV. So, dissolution has taken place in both cases. You go and check whether business is continued or discontinued. If business is continued, then method also can be continued. But if business is discontinued, then you take net realizable value. This was Supreme Court judgment based on facts. But then with effect from AY 1718, we have income computation and disclosure standards, which overrule, let me tell you this rule, if there is any contradiction between ICDS and case law, the ICDS will override the case law. And ICDS 2 on inventories overruled the Shakti Trading case law of Supreme Court, stating that stock valuation will be always at NRV. So, this judgment is unaffected, but this judgment gets cancelled. Now, let's keep the rule very simple. If a firm or AOP, both, this is applicable to firm and AOP both, if they have undergone dissolution, whether the business is continued or discontinued, we will always adopt net realizable value. Always adopt net realizable value. And last part, after which we can go to 45.4 from our full course lectures. 40B ka limits with respect to interest, it is amount actually paid or amount as per deed or 12% per annum. Simple interest, whichever is lowest will be allowed. you can pay it to working partner or sleeping partner. Both cases में it is going to be allowed. Loan का cases also will be given. If there is interest on capital and drawings both, so we will not do set off. We will see the gross amount for the purpose of limit, and limit for interest and remuneration will be applicable. 40B का limit, this 12% only if you are paying to partner. If you are paying to partner ka spouse or HUF or any third party, then this is not going to be applicable, and obviously whatever is allowed to the firm will be taxable for the partner. But primarily your focus should be on what is the limit: actual interest authorized by deed or 12% per annum simple interest, whichever is lowest is going to be allowed as a deduction. As far as the remuneration is concerned, once again, first two are actual and amount authorized by deed, but for the third limit you have to go and check. In case of book loss, it is going to be flat 150. In case of book profit, first 3,90,000 or 1,50,000, whichever is higher, and balance के लिए 60%. मतलब first we will have to go and compute whether it is book profit or book loss. I'll take you that first. Book profit calculation is basically your PGBP computation only, but with some extra adjustment. So PGBP this is like revision of PGBP computation. Net profit as per PNL. Add interest and remuneration paid to partners as per books of accounts, because deduction will be separately given. All the PGBP ka adjustment: expenses debited but disallowed, income not credited but taxable, expenses not debited but allowed, incomes credited but not taxable. Do all the adjustments of PGBP. Can I call this PGBP before 40B ka deduction, because everything else you have done? And now give interest ka deduction, because for interest it is actual deed and 12% per annum. You don't need any limits, no? So give interest ka deduction. That means the only thing we are left to compute is the remuneration deduction. From this amount, if we subtract the remuneration allowed under 40B, we get our taxable PGBP directly. This is PGBP before remuneration deduction. That will be called book profit. If it is a positive figure, then book profit 3 lakh, first 3 lakh ka 90%, but not less than 150, because in loss cases also 150 is allowed. Balance पे 60%. And if it is a negative figure, so directly we will take 150. But don't make the mistake. Good students also go wrong here. This 150 is the third limit. Here you get book loss, and you directly say 150 is the deduction. Nice, sir. What if the actual amount was only 1 lakh? 150 will be the third limit. Book profit or book loss will decide the third limit. Actual deed or book profit book loss ke hisab se limit, whichever is lowest. It's the third limit. That's not the direct answer. So if I ask you the deduction, it will be whichever is lowest. If I ask you third limit, then you go and check book profit or book loss. Remuneration ka deduction is allowed only if it is paid to working partner. Matlab sleeping partner ka remuneration will not be allowed. The limit is for total all partners together, and book profit here will cover only PGBP. In MAT, as we are aware, book profit covers all heads of income, but in partnership, as we have already seen the computation of book profit, in partnership it is only PGBP ka income. So this was the part of partnership chapter that I had to do from the PDF. As I have already told you, 45.4 I will take from the full course ka lecture. 2 years ago, 45.4 was also very, very easy. It was one line. Suno, transfer of capital asset by firm to partner, fair market value. Matlab, partner to firm agreed value, firm to partner fair market value. Partner to firm agreed value, firm to partner fair market value. And in 2 lines, it used to get over. In the second minute, I was at the next chapter. Capital gains over. Chalo, let's go ahead. But what auntie did last year, because of that, the provision of 45.4 was completely changed. Completely changed, matlab, you know what was the amendment last year? Let me read out that amendment for you. In place of the existing subsection 4, I am giving you new subsection 4. Matlab, can I say only the number remains the same, the entire data changes, and this one line of 45.4 is now going to convert into explanation of more than 1 hour. मर जाओ ना आंटी प्लीज, एक बार मर जाओ, उसके बाद में I will stop criticizing you. More than 1 hour ka explanation on one section, 45.4. And with 45.4 they also introduced 9B. Dekho, if a partner was transferring capital asset to firm, so this provision is applicable. If firm was transferring capital asset, so this provision is applicable. But firm transferring capital asset ke liye, to now they have introduced 9B also. Capital asset, stock in trade, both are covered. So now there will be double section 9B as well as 45(4). So how they will together operate, all that explanation will require more than an hour, and extreme patience will be required from you guys, because this becomes a very, very important provision. An institute has recently tested this in the May 22 ka RTP as an MCQ case study of 10 marks. This whole concept of 45(4) read with 9B. Okay. So listen. Let me explain the concept of 45(4) पहले थोड़ा सा orally. After that, I will give you the proper writing wala provision. Orally will be majorly in the nature of logical explanation. What is the logic behind this? That will be my oral explanation. Then we will go to the provision wala part and eliminate all the complications. When auntie introduced this provision last year, it was so complicated that nobody was getting an idea only what is happening here. All the so-called organizations were conducting seminars on 45(4) and 9B, 45(4) and 9B, 45(4) and 9B. The seminars were such seminars where neither the speaker was having any idea nor the audience was having any idea of what is happening, because the section was introduced without any clarification. In the section, auntie added one line that if there is any difficulty in implementation of this section, so the CBDT will release the circulars and clarify the provision of the law if there is interpretational issue. And auntie ka ek aur habit hai. Every time she creates a new section, no, she always writes that line. Which line? If there is any difficulty in implementation, we will release circular. Because auntie knows that all the sections she introduces are sections which cannot be interpreted only. Only reading and understanding only is not possible. So unless and until they release circulars, it is not possible. So first she only released the section. I'll tell you what happened last year. First she released this section. If this section was released, we are the first people who have to read and interpret it. Tax professors. I read the provision. I incorporated the provision in the new book which was applicable for May 22, November 22. I took the batch and I explained what was given in 45(4) as per what they wrote in the law. It was confusing, it was not clear, but plain reading say whatever we could understand. And after few months, CBDT released a circular saying that CAs across the India are interpreting this provision in one way. Actually, that is not the interpretation is something else. Matlab, whatever CAs across the country were understanding in this provision, they changed it. CBDT ka circular came. One batch was also over. Second batch mein partnership had started. And that circular came. I read the full circular in one day. Understood what exactly is their interpretation. Obviously, second batch ko, it was taught as per the circular. And that second batch ka recording ka video was given to the first batch ka students as an information, as a message. Bola, bachche log, how are you? Your batch is over. I know you are missing me. So, ye lo, ek naya video. And what I have covered in 45(4), ignore that because CBDT ka circular has clarified something else. Auntie ka ye habit is costing us very badly. Because problem kya hota hai? Budget comes, our batches start. Institute to does not do only anything. Institute to will release only your study material just 2 months before your exam. Institute ka alag hi thug life hai. We have to read, we have to interpret, we have to incorporate question. Institute ka thug life batao. 45(4) and 9B was introduced last year. Matlab it was amendment for May 22, November 22. They did not give any question in the study material. They did not give anything anywhere. And one day they released the RTP of May 22. Seedha they asked MCQ. Case study wo bhi 10 mark ka. And MCQ mein bhi kyun malum hai? They give question, they give answer, they just have to give the correct option. They don't have to explain anything. Explanation to hamara kaam hai na. Institute has to just give you material. It is my humble request to all the sincere students of the class. Ab non-sincere ko I am ignoring only. After I finish this provision today, dekho ek to weekend hai, Saturday you've got nothing to do. Tomorrow is a Sunday, again you have nothing to do. Anyways, on all the days you have nothing to do. After I finish the provision, May 22 RTP ka, jo first question hai, which is 5 MCQs in one case study. Pura story is given and uske upar there are 5 MCQs on the basis of that story. 10 mark ka question hai. Solve that on your own. Please solve that on your own. And if you are not able to solve, May 22 का भी RTP का पूरा recording I have uploaded on YouTube. Every time a new RTP comes, it is always uploaded. November 22 का RTP recently I have uploaded. Okay, but you don't watch the recording and the explanation directly. देखो, full provision I will explain in class. After you do, that's the best way in which you can practice whether you have understood or not. Solve on your own. And if you don't understand, ऐसा फोटो खींच के भेजना नहीं है, sir please solve. I have already solved and the explanation के साथ में I have solved and uploaded with the RTP. You can like, share, subscribe, hit the bell button, never miss an update. So please ensure that you solve that. The good students of the class. बाकी अच्छा, by the way, May 22 की RTP का questions are incorporated in our MCQ book also. But थोड़ा numbering में change होगा. I'll tell you the reason. The cost inflation index का change happens, no? Last year के बच्चों के लिए multiply by 317 था. But we have to multiply by 331. So there is a little change in the data. So the question in our MCQ book is not exactly same as the question in May 22 RTP. I have modified the amounts based on cost inflation index. वो change, so that's your choice. Now you want to solve from our book or the RTP. बस RTP का if you solve, no, so that was for last year, तो multiply by 317 करना. Don't multiply by 331. Okay, and उसका explanation I have uploaded. Humble request है, solve it today only, so that you be sure कि हाँ इतना complicated provision auntie has introduced, but I am clear about everything. And majorly my explanation will be in lines with the CBDT का circular which was released last year. मतलब I am directly explaining a circular released by the government to you. So ये institute का circular, institute does not release circulars, CBDT का circular. Okay, so what is 45(4) का oral explanation logic? There is a partner who is leaving the firm. Leaving the firm. Okay, so if you leave the firm, we have to give you something, no? Specifically with respect to your share. मतलब partners capital account है, तो in the partners capital account there is going to be some credits over here. That can be the brought forward balance, the profits of the year, the capital introduction. Likewise there will be some debits over here. ABC अगर है तो, the brought forward अगर negative balance है तो, the drawings during the year, the loss. Finally this is the balance in your capital account. Can I say this balance in the capital account is the balance that I will take from the firm if I have to leave the firm? So against this balance, we are giving the partner some money, or we can also give him some asset. Take this asset and now go. Your accounts are settled. You understand what is happening? This transaction means there is capital gains for the partner. ध्यान से सुनना the logic of this provision. There is a partner who has some stake in the firm. Can I say the balance? मतलब credits minus debits, the balance. Think about it. You are partner in a firm. You have some investment in the firm. That is your receivable from the firm. That is a capital asset. My investment in the firm is my capital asset. And now I am leaving the firm. If I am leaving the firm will give me something for this balance, no? This means it is capital gains for the partner. How? The firm is giving me some money and some asset. So, value of that money plus value of that asset is what I receive as a partner, minus whatever is my balance in capital account. That is my investment in the firm. This balance is the profit, if you understand. Supposingly, my capital account balance is 5 lakh rupees. You understand the meaning of capital account balance? And I am leaving the firm. And the firm is giving me asset worth rupees 6 lakhs. That means, can I say, my investment was 5 lakh. But I am getting asset worth 6 lakh. This means I am earning capital gains of 1 lakh. Whenever a partner will leave a firm, and if he gets more than his balance in the firm, that means he has made a profit by leaving the firm. And that profit is going to be treated as capital gains of the partner. Samjha? Of course, yeah, I am explaining the logic. Provision I will explain. You can ask, sir, 5 lakh ka balance and he is getting only 4 lakh. So it will become a loss, no? Uska kya hoga? That provision ka detail I will explain. Well, logic understand. A firm has an outgoing partner. Outgoing partner will have some stake in the firm. For the partner, it is going to be like an investment, like a capital asset. Against that investment, we will be giving him something. It can be money or asset. It is like he has sold his investment in the firm to the other partners. He has sold his investment in the firm to the other partners and he has earned capital gains. What we give him is a selling price. What was his balance in the firm is his cost price, and that will be capital gains. Kiska capital gains? Partner ka capital gains. Are you clear till here? Outgoing partner getting anything from the firm is like capital gains for him. But this capital gains which is of the partner, listen very carefully. Capital gains of the partner will be taxable for the firm. Compute this gain. Whose gain is this? Whose gain is this? Partner ka gain. But we will make the firm pay tax. You know why? The concept of buyback tax. Yaad karo. You are holding shares. Yaad karo buyback tax. Nalayak log, those who thought it is very easy, so I will not revise. Abhi yaad karo. You are a shareholder in a company. I will recollect for you. Shareholder in a company. Company wants to reduce its paid up share capital. The company is giving you an offer, take this money and cancel your shares. Matlab you take money or you take asset and minus the value of the share. That is capital gain of the shareholder on buyback. But we take tax from the company, buyback tax 20%, compulsory surcharge 4% cess. Mitro. So have we seen the concept of capital gain of shareholder, but tax we will take from the company because we don't want to run behind individual shareholders? Same concept we will apply here. Same concept. Who has earned the capital gains? The partner, because he got more than his stake in the firm. But whom will we tell to pay tax on that income? The firm. Matlab, what is the provision of 45(4) in one line? The capital gain of the partner will be taxable for the firm. That's the provision. Gain kiska? Partner ka. Which gain did you understand? Getting more than the investment. Gain of the partner, but we will take tax from the firm. Is that clear? That's the concept of 45(4). The logic of 45(4) similar to buyback tax. Ab time hai pura ka pura provision karne ka in detail, but the logic is clear, and now that the logic is clear, no? So understanding the provision is not going to be difficult. Whatever be the complication involved, if you are clear about the logic, you will understand all the calculations that are given here. Be honest. Is the logic clear? So I want your participation. Who is leaving the firm? Partner. Against his stake in the firm, he is going to get something. That means it is like he has sold his investment in the firm. That will result in capital gains. That gain is earned by the partner because he is getting more than his investment. But we will take tax from the firm. That's 45(4). Now let's go to the calculation part, because somewhere 45(4) read karte you will see that arey yaar ye to 9B maybe it is written the same thing. Okay, so that discussion we will also be having. Alone 45(4) is very easy. Alone 9B is also very easy. What was 9B? Dissolution or reconstitution. Firm or AOP. Transferring capital asset or stock in trade to partner or member. So it will give rise to capital gain or PGBP respectively, where selling price equal to fair market value. Okay. Now let's see what is written in 45(4). Any transfer of capital asset or money. Any transfer of क्या मित्रों? Capital asset or money. देखो capital gains का chapter है ना. 45 is charging section of capital gains, no? So here we can't write stock in trade. इसलिए 9B, which is an independent provision, not a part of capital gain, not a part of PGBP. So there we wrote both assets, capital asset and stock in trade. But 45(4) is only mentioning capital asset and money. Any transfer of capital asset or money by whom? By firm. Firm will transfer to whom? Partner. And AOP will transfer to whom? Member. any transfer of capital asset or money by firm to partner or AOP to member. Everyone with me? At the time of reconstitution of the firm, at the time of change in constitution, reconstitution. Transfer of capital asset or money at the time of reconstitution. मतलब dissolution is not covered in 45(4). If dissolution is not covered in 45(4), मतलब dissolution will be covered only where? 9B. And 9B का calculation is clear, no? Fair market value equal to selling price. Stock in trade is not covered here. Stock in trade will be covered only under 9B. FMV is selling price, PGBP will be computed. मतलब there are some occasions where only 9B is applicable. There are some occasions where only 45(4) is applicable. Supposingly we are giving money to the partner. There is 5 lakh ka capital balance, we are giving him 6 lakh. So do you understand only 45(4) is applicable? Because 9B ke liye it has to be capital asset or stock in trade. If it is money, so only 45(4). So when alone 9B will apply, it's very easy. FMV equal to selling price. When alone 45(4) will apply, very easy. Very easy. What is the rule that I taught you in this case? There is going to be capital gain for the partner, but it will be taxable for the firm. Similar to the logic of buyback tax. On behalf of the partner, the firm will pay tax. So, only 9B is easy. Only 45(4) is also easy. अरे 45(4) का calculation कितना simple है? Whatever we are giving him, minus whatever was his investment in the firm. That profit is the capital gain of the partner and take tax on the firm. So 9B alone is very easy. 45(4) is alone very easy. But will there be a case where 9B and 45(4) both will apply? Because if you observe the facts given in 45(4), some of these facts coincide with what is given in 9B also. And what are those facts? If I have to tell you this orally, what are those facts? Well, it will coincide. Can you guess? Which asset is transferred? Which falls in? You just have to identify which provision falls in both sections. Does stock in trade fall in both sections? No. Money falls in both sections? No. Stock in trade only 9B, money only 45(4). So which asset falls in both? Capital asset. So देखो transfer is तो same in both. So this part is same. मतलब capital asset by firm or AOP to partner or member. Occasion, if it is dissolution, so only 9B. Dissolution is not covered in 45. So if it is reconstitution, so is it covered in both 45(4) and 9B? So can I say if it is capital asset, reconstitution, capital asset, reconstitution, capital asset, reconstitution. So is 9B applicable? Check karo. Capital asset reconstitution, is 9B applicable? And is 45(4) also applicable? When both sections will apply, so what is that calculation? That is the complication. 9B ka calculation is easy. Fair market value equal to selling price. 45(4) ka calculation is easy. Partner ko whatever we are giving extra is his capital gain but taxable for the firm. Difficult क्या है? Both invoked simultaneously. और वो जो May 22 RTP I am requesting you to solve, no request है. If you are interested in your own career, so it is a request. That is basically combo of 45(4) and 9B. Two firms are given. बता देता हूं a little about that question. Two firms are given, ABC and XYZ. ABC का reconstitution is happening. XYZ का dissolution is happening. Both are transferring capital assets. तो ABC के लिए we had to do 9B and 45(4) both. But XYZ का dissolution है, तो only 9B is applicable. 45(4) is not applicable. And one of the questions they have asked, what is the capital gain under 45(4) for XYZ? And 0 is given in the options. आप समझा क्या? When they ask you complicated case studies, no? 5 case studies they ask. 5 में से 1 will be such that you have to solve a full sum. But second will be such that उसका answer is already covered in the first वाला calculation. Okay, so to average out, they will ask one very difficult, one very easy, one very difficult, one very easy. Together it becomes a 5 questions ka proper case study in MCQs. If you all have been simultaneously doing MCQs of all the chapters that we have completed till now, so you must have definitely come across some of the case study based MCQs in special rates of tax. वो NRI में देखा था सौम्या, राजेश, दिनेश, कार्तिक का क्वेश्चन. Have you all gone through that question? नहीं तो फिर लाइफ में बहुत ट्रबल रहने वाला. You will understand what is case study based MCQ only if you are going through the books that I have given you simultaneously. But coming back to 45.4, 9B is fair market value. 45.4 is capital gain for the partner, taxable for the firm. Before I give you 45.4 ka calculation, let's have some conclusions if you are understanding. Therefore, अगर the asset transferred is only stock in trade, capital asset is not transferred, money is not transferred. I wish to see whether you are clearly understanding the facts given here and the facts given here in 9B. If it is only stock, so which section will apply? My options are 9B, 45.4, none of them ke both of them. Acha, by the way, other conditions are fulfilled. Only stock. Stock can be transferred at the time of dissolution or reconstitution. Transferor is firm or AOP. Transferee is partner or member. But do you understand only 9B is applicable? Okay. If it is only money, so what will apply? Only 45.4. But this has to be only at the time of reconstitution. क्योंकि money given at the time of dissolution, अरे money given cannot be gained. You have to give his money, no? उसका stake था firm के अंदर. Observe करो 9B के अंदर money was not covered. 45.4 में it was covered. And 45.4 is only talking about reconstitution. ठीक है? If it is a case of dissolution, whether the asset transferred is capital asset or the asset transferred is stock, only one of the sections will apply. 9B, clear hai? So this is easy, fair market value. This is easy, gain of the partner taxable for the firm. Complication will arise only in this situation if it is transfer of capital asset and it is transferred at the time of reconstitution. Capital asset, reconstitution. Capital asset, reconstitution. Do you understand? In a case like this, we have to apply both. Both matlab 9B as well as 45.4. Both have to be applied in a case like this. Understood? This is the complicated part. How we are going to apply 9B, how we are going to apply 45.4, what will be the simultaneous application? This is the very, very complicated part that we have to discuss. But at least we are clear which section will apply when. Mitro, chaliye. So first I will give you calculation of 45.4. What is calculation of 45.4? The capital gain of the partner. अरे short term memory loss याद है क्या? Partner is getting more than his stake in the firm. But it has to be capital asset or money and reconstitution. Capital asset or money and reconstitution. Correct? Capital gain of partner, but we will take tax from firm. Capital gain for the partner, taxable for the firm. Someone has requested, sir, can you repeat the money wala part? Dekho, we are giving money to the partner. If it is reconstitution, is 45.4 applicable? Yes. Okay. If it is dissolution and we have given money, dissolution is not covered in 45.4. Is that clear? So if at all dissolution is covered, it is covered here. And what have we given? We have given money, no? So is money covered here? No. That means neither 9B nor 45.4 will be applicable. Dissolution mein if money is given, none of them will be applicable. Dissolution mein only capital asset and stock in trade will be covered. Is that clear? 9B ke andar. Chaliye. 45.4. Capital gain for the partner. Do you remember my oral explanation that whatever he is getting from the firm, what is he getting? भूल गए कि याद है? We are giving two things. We are giving two things. So think about it as a partner. You have some capital stake in the firm. Take an example. 5 lakh is your capital balance. बदले में the firm is giving you something because you are leaving the firm. So no, firm is not dissolving. If the firm was dissolving, then 9B will apply. 45(4) में it is reconstitution. Correct है क्या नहीं? You are leaving the firm. Retiring partner, one old partner continues. Reconstitution, meaning याद है? Change in PSR, admission, retirement, one old partner continues. Reconstitution. What is the firm giving you? The firm can give you money. Can I say that money you are getting in place of your investment in the firm? Plus, what is the second possibility? The firm is also giving you. What are the two things possible in 45(4)? Money or capital asset? Asset नहीं, capital asset. क्योंकि stock not cover. Capital asset. So fair market value of the capital asset that you are getting. मतलब, supposingly, we give the partner one land and 50,000 rupees cash. मतलब 50,000 plus value of land. 50,000 plus value of land. Can I say this is the total that we are giving the partner against his stake in the firm? Agreed hai? And what will become the cost of acquisition here? The balance in his capital account. जैसा कि I had explained orally. Let's take an example. उसका capital balance is 5 lakh rupees. उसके बदले में we are giving him 50,000 का cash and land. तो land का fair market value find out. Supposingly land का fair market value is 6 lakhs. मतलब can I say 6 lakh का land, 50,000 cash. 6 lakh land, 50,000 cash. 650 and minus what was the balance in his capital account? 5 lakh rupees. 650 minus 5 lakh. The balance in his capital account is going to be capital gain earned by partner, taxable for firm. That's 45(4) for me. Whatever we are giving to the partner in the form of asset, so fair market value and money, to actual amount. Money plus FMV of asset minus his stake in the firm. That is going to be capital gain. That will be taxable with some clarifications. This calculation part I had explained orally when I was teaching you the logic of 45(4). Now some detailed explanation. First clarification. Is it possible that this amount is negative? Matlab we are giving him only 4 lakh worth assets. And what was his balance? 5 lakh? Negative? Negative है तो ignore. मतलब if it is profit, if this is positive, so we will take tax from you. And if it is negative, so we will not take any tax. Or we will not give you any set off. Ignore. Positive will be taxable, negative will lapse. Matlab, partner can have capital gain or capital loss. If it is capital gain, to make the firm pay tax. But if it is capital loss, so no tax benefit for the firm. Is that clear, everyone? This is the first clarification. So all those who had that doubt, when I started 45(4) ka explanation, I told you gain of the partner taxable for the firm. I gave you an example. Okay, against his capital balance, we will give him some asset and money. So that difference will be the gain. But you must have got a doubt in your mind, sir, it can be a loss also. What will happen to the loss? Lapse. No benefit. Is that clear? Next. Further clarification. Because now we are not doing logic. Now we are doing provision. Logic we have understood. Provision के अंदर they have given more clarification. Are we checking the balance in capital account and making that cost of acquisition in this gain computation? Continuously we are taking an example. 5 lakh ka balance, 5 lakh ka balance. We are taking an example. Here they have clarified. Clarification 1. This capital balance can be represented in any form. Are you awake? Can someone explain what this means? ये तुम कल तक टाइप नहीं करना, एक्सप्लेन करना है तो भले थोड़ा डिस्टरबेंस होएगा बट एक्सप्लेन ऑन ऑडियो. Anything. It can be capital account or current account. It can be fixed capital or floating capital. Whatever is his total stake in the firm, which we will remove, no, now that he is leaving the firm. We will make his balance zero, no? His total balance in the firm, whether it is fixed capital, floating capital. In partnership accounts, you have studied them by the names of capital account, current account, something like that. Everything will be taken. Clear hai mitro? Mitro, represented in any form will be taken. And second clarification. Total 3 clarifications hai. One is this, loss hoga to ignore. And the remaining 2 are with respect to balance in capital account. So usko I am writing under this here. Okay. And whatever for this I have already written side mein. So total 3 clarifications samajh mein aaya. Logic I already explained orally to you. Gain of partner taxable for the firm. How to compute the gain? What he is getting minus his balance. Gain hoga to firm will pay tax, loss hoga to lapse, and if it is capital balance, it can be represented in any form. That is the second thing that we discussed. Third thing. Are you taking his capital balance in the firm as cost of acquisition? This capital balance can be represented in any form, capital account, current account, anything. Mitro, for this purpose, you will ignore any revaluation. For this purpose, you will ignore any revaluation. You will also ignore any value of self-generated asset or goodwill. Ignore any revaluation, ignore any self-generated asset or goodwill. For what purpose? For what purpose? For deciding the balance in capital account. Ignore करना. Sir, समझा नहीं. बोलो समझा नहीं. Tell me that you did not understand. नहीं समझा ना? नहीं समझा ना? Very good. Now focus on this example. Very simple example I am taking. Okay? This is the balance sheet of a firm. 3 partners. ABC. 10 lakh, 10 lakh, 10 lakh. मतलब capital balance 30. And 3 assets. Asset X, asset Y, asset Z. 10 lakh, 10 lakh, 10 lakh. So asset side also 30. No problem. Mitro, the balance sheet tallies at a simple figure of 30. ये जो 10, 10, 10 we have written, do you understand this is the historical cost of asset? The asset is appearing in books of accounts at historical cost, original cost, sunk cost. We must have purchased this 100 years ago at 10 lakh rupees. Will today's fair market value be different? So look at how clever we are. Understand karo. Supposingly we are giving asset Z to partner C. C wants to retire and we are giving him asset Z. So are we giving him capital asset? Is this a case of reconstitution? So fair market value of asset Z will be taken as selling price. Balance in his capital account, which is 10 lakh, will be taken as cost price. And that will be gain of the firm. Matlab gain of the partner but taxable income of the firm. If this fair market value is very high, supposingly iska fair market value, it's been so many years, no? So fair market value now it is 80 lakh rupees. So do you understand that 70 lakh rupees is the taxable income of the firm? Do you understand 70 lakh rupees is the taxable income of the firm? How? Fair market value of the asset given to the outgoing partner, 80 lakh rupees. Minus balance in his capital account, 10 lakh rupees. 70 will be the profit over here. And who has to pay tax? Firm has to pay tax. Gain partner का है, because 10 lakh के stake में he is getting 80 का asset, but tax we will take from the firm. Correct है? तो firm is very upset कि यार अच्छा 70 lakhs समझ में आया क्या मैथ्स मित्रों? We have to pay tax on 70 lakhs. Firm is very upset. Idea. We are living in a country called India. Idea का तो कोई कमी इस दुनिया में है ही नहीं मित्रों. Idea. Once Z is going, do we still have remaining assets X and Y? है ना? Idea. Let's revalue them. Take an example. Asset Y. What was it purchased at? 10 lakh rupees. Today का fair market value is 100 lakhs. 1 crore rupees. Okay. That means can I say we revalue this asset to 100? Matlab can I say we will increase the value of the asset by 90? How increase by 90? क्योंकि 10 lakh is already there in the asset account. Accounts आता है 10 lakh is already there. Make it 100. So can I say we will increase the value of asset Y by 90? Y asset account debit 90 lakh rupees, increase the value. If debit ka entry 90 lakh is passed, you understand credit ka entry will also be passed. You know where? In companies, सुनो ध्यान से, this is accounting. In companies, when we do revaluation, the journal entry is asset account debit to revaluation reserve. मित्रों, asset account debit 90 to revaluation reserve. But in partnership firm या proprietorship, there is no revaluation reserve. So whatever we will credit, we will directly credit in the partner's capital account. So what have we done? Increase the value of this asset by 90 and correspondingly increase the capital balance of ABC by 30, 30, 30, assuming equal profit sharing. Now tell me, with this revaluation entry, what has the capital balance of C, the retiring partner, become? What is that balance? 40. Will that increase cost of acquisition of the firm because cost of acquisition is balance in capital account? So mitro, we will not let you do this. Ignore any revaluation, क्योंकि if we start allowing this, तो क्या होगा? Every time a firm is giving any asset, remaining asset को they will revalue. जबरदस्ती का revalue. Increase the capital balance artificially. And what is the significance of capital balance in 45(4) का calculation? It is also the cost of acquisition. That means if revaluation starts being allowed, it becomes an opportunity to artificially increase the capital balance, matlab cost of acquisition, and reduce this gain amount. I think now you are in a position to understand this part. Ignore any revaluation. For the purpose of calculation of capital balance, we will not take any revaluation. Because taking revaluation means artificially increasing the capital balance. Is the logic clear? So when I wrote this line, ignore any revaluation, I told you, bolo nahi samjha. Now tell me samjha. Tell me that we have understood. Tell me why we are ignoring revaluation. We are clear because we don't want to artificially increase cost of acquisition. So if that is understood, second part is very easy. One thing we have all clearly understood, that increasing this value of any of the existing assets is not going to be allowed. Everyone clear? Everyone clear? That existing assets का value increasing is not going to be allowed. तो idea, firm क्या बोलता है पता है? We are a 100-year-old firm. We are very, very famous firm. We are very reputed in the market. We have a good goodwill in the market. First of all, presently in the balance sheet, is there any goodwill? तो यहाँ पे I have written goodwill or asset. This asset means nothing but value of your brand, etc. मतलब ultimately you can merge them. Reputation, value of your reputation, value of your brand, value of your goodwill. Presently, is there any goodwill in the balance sheet? नहीं ना. But idea. This is our list of assets. यहाँ पे add कर दो goodwill of 1 crore 50 lakhs. If you add goodwill of 1 crore 50 lakhs on the asset side, do you understand you will on the liability side increase 50, 50 and 50 year. Same as what you were doing with revaluation of your asset. Same hai, exactly same hai. We were increasing our value of asset Z from 10 lakh to 100. We are now creating goodwill from 0 to 150. Goodwill presently was 0, but we are making it 150. What will be the impact of creating this goodwill in accounts? Correspondingly, the capital balances of the partners will also have to be increased. And if capital balance is increasing, matlab we are increasing the cost of acquisition over here. We can't allow you to artificially increase your cost of acquisition, and therefore any self-generated asset like brand, any self-generated asset like goodwill, which you are artificially adding on your asset side so that you can increase capital balance. And what is the relevance of capital balance in 45(4) calculation? Ye zaruri hai, then only you will understand the logic. What is the relevance of capital balance? That is cost of acquisition. Artificial increase will not be allowed. We will not let you do that. Now are you able to understand this full point number 2? Mitro, so this is the calculation given of 45(4). First, when I started the provision, I just gave you the logical explanation. I'll start from the start, see if you are clear about the entire calculation, because now 45(4) ka calculation is over. And Mitro, let me tell you, this thing that is over was also very easy. 9B was so easy. 45(4) was also easy. The most complicated part is going to come now, where I have to teach you simultaneous invoking of 9B and 45(4). When will that happen? Capital asset reconstitution. Understood? But pehle my revision. First of all, what was 9B ka revision? 2 assets. Capital asset stock entry. 2 occasions. Dissolution reconstitution. 2 transferors. Firm AOP. 2 transferees. Partner or member respectively. 2 heads of income. Capital gains or PGBP, where FMV will be taken as selling price. That's 9B. What is 45(4)? There is an outgoing partner. It's a case of reconstitution. First of all, only reconstitution. Dissolution not applicable. Only capital asset and money is covered. So stock in trade is not covered. Capital asset or money given to an outgoing partner. So that will be given against his stake in the firm. If we give him more than his stake, that means he has earned a gain by leaving the firm. But then gain will be taxable for the firm. Gain of the partner taxable for the firm. Gain of the partner taxable for the firm. How will we compute gain of the partner? In selling price, take the money that we are giving and value of the asset, which has to be capital asset. Then only 45(4) is applicable. In cost price, take balance in his capital account and compute your gain. If it is loss, ignore. If it is profit, then make the firm pay tax. And when you take the balance in capital account, you will first take all balances, matlab capital account, current account, everything. Second, if there is any artificial increase in the balance in capital account by revaluation of asset, by creating any self-generated goodwill or brand or any asset, so that artificial increase will be ignored. It won't be taken for capital balance. It won't be taken for cost of acquisition purposes. That was the calculation of 45(4). Matlab 9B alone is clear. 45(4) alone is clear. But there is going to be some occasion in life where 45(4) and 9B will simultaneously apply. Someone wanted to ask something? Because I am going to the most complicated part of this thing. Bol, Rona.
Sir, our main bank 45(4) में the partner planning and there's a change in PSR which is also reconstituted.
Correct.
So थोड़ा percentage हम कुछ वापस दे रहे हैं. How can we calculate cost of acquisition?
But I'll tell you what. If it is change in PSR, so we won't be giving only any money or asset.
नहीं, मतलब PSR करने के बाद उसका percentage हमने reduce किया. So we have to pay some of the percentages back to them. तो उसका पैसा तो
नहीं. मतलब you are trying to say that we are changing profit sharing ratio.
हाँ, तो अगर आप 3% पे हो and we are reducing you.
Then you have never studied accounts properly, Ronak. Please, क्योंकि you are talking about something that cannot happen. ABC 3 partners. 2:2:1 का share. With that share, obviously, every year profits are being credited, losses are being debited. Brought forward capital balance होएगा तो we will start with that opening balance, closing balance होगा. Correct or no? Drawings will be debited. Further capital introduction will be credited. With this we get the present day capital balance. किधर गया? With this we will get the present day capital balance. Yes. Now अचानक से we are saying 2:2:1 को कट करके we will make it equal. We are changing the PSR. Reconstitution है, but we are not paying him anything. कल से जो भी प्रॉफिट होगा उसको we will credit equal. Change in PSR is change in PSR. So some partners will gain something, some partners will lose something, but at that time we are not going to pay him anything. आप समझा क्या? From tomorrow onwards जो ratio of crediting profit or losses होगा वो ratio change, but we are not going to give. Likewise, admission of partner is also reconstitution, but we are not giving anything. He is going to bring money or asset and 45(3) will apply. 45(3) याद है रोना? ये जो concept है, it says reconstitution. Reconstitution had 3 events: admission, change in PSR and retirement. Retirement is the only occasion where we will give him all this. We are saying he is leaving the firm, he is selling his investment. ये बोलता reconstitution है, but under reconstitution it can apply when it is retirement. If it is the other 2 cases of reconstitution, that is change in PSR या admission, there is no question of giving him anything. 45(4) will be triggered if we are giving him money or we are giving him asset. Other than that, 45(4) cannot be triggered. I hope you understand.
Sir, अगर वो कोई part अपना लिख के जा रहा है, तो it is considered as a drawings only or kind of?
तो फिर let me be clear. In that case, firm will not give him. Firm नहीं देगा उसको. You know who will give him? The partners have to give him. मतलब you are trying to say that we are reducing किसी का profit share तो increasing किसी और का profit share. One partner has gain ratio, other has sacrifice ratio. तो the gain ratio वाला partner will pay some compensation to the sacrifice ratio वाला partner. तो the partner will pay. समझा क्या? समझा क्या? Okay. तो this therefore practically will apply in cases of outgoing partner and taking something and going. And when I say something, it has to be value of asset या फिर money. And the rest of the calculation, especially this capital balance वाला part, is clear, everyone? Because now we go to the most complicated aspect where CBDT का circular का direct discussion is going to take place. Okay? If it is transfer of capital asset, and it is an event of reconstitution. Capital asset, reconstitution. Capital asset, reconstitution. Which section will apply? 9B के 45. Both will be applicable. Because 9B बोलता है transfer of capital asset on dissolution or reconstitution. And 45(4) says transfer of capital asset at the time of reconstitution. Transferor, transferee are same in both sections. Both will apply. तो question ये arise होता है because see, there is one calculation given in 9B. Come here. Can you see this calculation of 9B? This is 9B calculation. And there is one calculation given in 45(4). Can you see the calculation given of 45(4)? One thing is sure, that in the situation that we are now doing, both calculations will apply. मतलब firm के लिए we will calculate capital gain as per 9B. Fair market value of the asset minus cost of acquisition of the asset. Capital gain of the firm. And partner के लिए we will calculate capital gain. FMV of the asset received minus his stake in the firm. That is capital gain of the partner. But that also we make taxable for the firm only. That is 45(4). My question right now is this only this much. I am not asking you to interpret the provision for me. My question is, do we have to do both calculations? सिर्फ इतना. Because we are fulfilling the conditions of both sections, we will have to do both calculations. Yes or no? Yes. Step number 1. First we have to calculate 9B. This was what was clarified by CBDT in its circular. That first calculate 9B. And step number 2 will be 45.4. Who clarified this? CBDT clarified. By giving a circular, they gave an example, and I am going to take that CBDT circular ka example with a little modification. CBDT ka circular ka jo example hai na, that gave a very easy situation. Easy situation no will help you only for understanding easy things. I will make some modifications and make the example a little complicated, so that once you understand the complicated stuff, no, to little wala, easy wala things you will always understand. Okay, but be clear. Capital asset reconstitution. Both provisions are applicable. Both are applicable. What will apply first? CBDT clarified. First apply 9B. After you apply 9B, then go and apply 45.4, because 9B ka calculation will have an impact on 45.4 ka calculation. And listen to the logic. Dekho, 45.4 mein I did the same thing. First I explained the logic of what is happening. Then I gave you the calculation. So everyone understood the calculation. Everyone understood, no? I am assuming now. So let me explain the logic. 9B is capital gain of the firm. And I will now onwards say capital gain only. Because bhale hi 9B covers both incomes. Capital gain as well as PGBP. For both simultaneous application, it has to be capital asset. So here I am only talking about capital gains. Is there capital gain of the firm? Is there firm getting a gain in 9B? You agree? So do you understand that whenever a firm is earning any kind of gain, a portion of that gain will be credited to partner's capital account? If there is a gain, you have to record in accounts, no? And if any gain is recorded in P&L account, will that gain be credited to partner's capital account in their profit sharing ratio? So this gain, when recorded in accounts, will change the balance in capital account. Yes or no? Firm has transferred capital asset at the time of reconstitution. There is gain as per 9B, and that gain will be recorded in accounts. If recorded in accounts, will it have an impact on capital balance? And do you understand that capital balance is going to be used for this calculation? Do you understand? In this calculation, capital balance of the partner has a very important role to play. What is that role? What is that role? You understand? It is cost of acquisition here. Barabar hai ke nahi? So listen what CBDT clarified. That after this gain, the capital balance will change and the new capital balance will be taken as cost of acquisition. And suno. This gain, which is changing the capital balance, is this a revaluation ke self-generated asset? Nahi, sir, it is an actually earned gain. Yahan pe kya tha? This 10 lakh became 100. Ya zero ka goodwill became 150. Have we actually earned that profit? Nahi, we are only increasing the value of asset in accounts. So don't take that valuation. Ignore karo. But yahan pe what is happening? Are we transferring our asset and earning a gain? Is it an actually earned gain? Ke only value of our asset has increased. We have actually earned that gain, no, by transferring our asset to our partner. So my question again, because some of you all made a mistake. My question again. This gain that is happening in 9B, is it actual gain ke just increase in value of asset? Actual gain hai na? So actual gain will increase the capital balance. Yahan pe what are you asked to ignore? Revaluation ignore. Lekin agar actual gain hai, to credit that actual gain in partner's capital account, change the capital account balance, and accordingly the modified balance will become the cost of acquisition here. And chronologically, first you will have to therefore calculate 45.4. First you will have to calculate 9B, and then you go and calculate 45.4. Mitro, samjha kya? Mitro, understood? So let's take the example directly from the CBDT ka circular, but modified version of the example. CBDT ka example was very easy, and we are not here to do easy things. We are giving you balance sheet of a firm. As per CBDT circular, there were 3 partners. ABC, whose capital balance is 10 lakh, 10 lakh, 10 lakh. So what is the total here? 30 lakhs. On the asset side, there was land. Land S, land T, land U, and all three lands का historical cost, original purchase price was 30. 10 each. And CBDT का circular said, partner C is retiring and we are giving him land U. बस इतना ही. मतलब CBDT का balance sheet is tallying at 30. CBDT का balance sheet is tallying at 30. But I want to make the example a little complicated, so I am not going to stop here. Other than the land, can we have other asset? Can we have cash bank? 40 lakh rupees. Can we have asset like our stock debtors, our other current assets? 30 lakh rupees. Can we have other assets as a partnership firm? ऐसा है क्या? खाली land होगा क्या? Can we have other assets? Yes. So my balance sheet I will tally at 100. I am changing. मतलब CBDT का example was only this much. But I told you, no, I am making it a little complicated. Once you understand the logic and the calculation, nothing is complicated. So my balance sheet total is 100. And you know how to make accounts? If you have never been taught this by your accounts teacher, I am telling you how to do it. First take the asset side total. Then write that total. Don't take liability side total. Write the total. And then inside you write whatever you want. First you match these two. Because this is a very, very important event in the life of a CA and a CA student. Asset equal to liability. तो ऐसे करने का. Make your balance sheet tally naturally or artificially, magically, but make it tally. और अब I have to fill up the gas of 70, no? तो इस गैस को fill up करने के लिए I have got multiple options. Supposingly there are loans. Possible? 55 lakh rupees का loans we have taken from outside parties. Creditors will come here. Say 15. इतने में I am telling my balance sheet. I could have taken more assets, more liabilities. CBDT has to taken only this much. I have still complicated my example in comparison with CBDT. Okay. And other than this, CBDT has given one last data. CBDT said, ये जो three amounts are given, 10 lakh का value for each land. One thing you understand, this is historical cost, original cost, sunk cost, original purchase price. Land is appearing in our books of accounts at historical cost. मतलब they are not following Ind AS. I hope you know. Ind AS के अंदर we have to follow क्या वो fair value accounting का concept. Something like that. Start revising some of your Ind AS का provisions because minimum alternate tax में tax professors are required to teach you Ind AS also. I have to teach you Ind AS. So you revise because my Ind AS will not be as good as my direct tax. And I am not liable or responsible also for that. I hope you understand. Okay. So let's talk about land S, T and U. CBDT in its circular said कि इनका fair market value is today. Obviously, 10 lakh is original purchase price. No, today का fair market value will be different. So fair market value of land S 60 lakhs. Fair market value of land T 40. Fair market value of land U 50. In CBDT का circular, all three lands का fair market value they took 50, 50, 50. उससे क्या होता है पता है? Confusion होता है. That if I tell you there is increase in FMV of 40 lakhs, you will get confused. कौन से land का बात कर रहे हो? But now if I talk about increase of 40 lakhs, that means you know that I am talking about land U. Because 10 has become 50. If I talk about FMV of 60 या FMV of 40 या FMV of 50, तो you clearly identify that 60 मतलब I am talking about land S, 40 मतलब I am talking about land T, 50 मतलब I am talking about land U. So I have made two changes in CBDT का example, CBDT का circular. Change one, I have added some more current assets, current liabilities. And second, fair market value का I have taken different amounts. Ultimately, it is only an example. And with this, we are in a position to learn our calculation. This is the existing financial position when one day suddenly it was decided that partner C wants to leave the firm. He wants to retire. So no, firm is not dissolving. If firm was dissolving, then only 9B is applicable. And we are going to give him this land you, our capital asset is being given to our partner. So no, if we were giving stock in trade, तो only 9B would have applied. But we are giving capital asset. Capital asset है, reconstitution है. Capital asset है, reconstitution है. Is 9B applicable? Yes. Is 45(4) also applicable? Yes. And as per clarification, first we will apply 9B, create new partners capital account, and that will be taken as 45(4) ka cost of acquisition. Everybody is with me? Along with land you, original purchase price 10 lakhs, but present day market value 50 lakhs. Hello. Along with land you, we are also giving him some money, say 10 lakh rupees. Matlab, there is an outgoing partner. Who is that outgoing partner? Partner C. What is his capital balance in the firm? 10 lakh rupees. Against this 10 lakh, we are giving him two things. One asset, that is land U. Historical cost 10 lakh, but present day value 50 lakhs. Plus cash also, worth 10 lakh. And we have enough cash to give that 10. Can you see that we have 40 lakhs ka cash? Mitro, again, in CBDT example, they had only given the land. So that was a little easy. But I want to take land and money both to make it a little complicated. Thoda easy, thoda complicated. You should understand all the provisions. No? So one thing we have all understood, that we will have to do 9B and 45 for both calculations. Mitro, and have we also understood what will happen first? 9B ke 45 for that CBDT is clarified. I told you the logic also. Ke 9B ka gain will create fresh capital balance for 45 for. So what will we do first? 9B. So don't think about everything together. It will create confusion. We will go one by one step at a time. Small milate jao, large banate jao. One step at a time, one by one. Step number 1. Tell me which calculation will come first. 9B ke 45 for 9B. 9B ke under there are two possible incomes, PGBP and capital gain. If we are discussing this concept, matlab it's not a case of PGBP. If it was PGBP, then only 9B is applicable and so much discussion is not required. 9B, which income we will calculate? Capital gain. Correct hai? What is the calculation? एक काम करता हूं, I'll just show you 9B का calculation again, so that you don't make any mistake. This is the calculation. 9B का. Whose gain is this? Firm का gain. What is the firm giving to its partner? Capital asset. Uska selling price and cost price we will take, so accordingly we will get capital gain of the firm. But 9B has clarified that selling price mein we have to take kya? Fair market value. Common sense hai. We are giving our partner land U. 10 lakh was a value 100 years ago. It has got no value today. It is a sunk cost, irrelevant cost. Today ka value land ka kya hai? Come on. Today ka what is the value of the land? 50 lakh. That means what will be taken as sale consideration as per 9B. Fair market value of the asset, that is what we have written in 9B का calculation. बस खाली mistake ये हो सकता है if you take, what are we giving to our partner? In my example, I complicated the example. What are we giving? Are we giving land? Yes. Are we also giving money 10 lakhs? So the total that we are giving our partner is 60 lakhs. What will we take here? What will be taken? Only 50, because 9B does not take money ka value. 9B takes only asset ka value. And what is that? Land U ka. Land U diya na? Land U diya na? What is that land U ka fair market value today? 50 lakh rupees. So in the capital gain of the firm, we just have to take the fair market value of the asset that is being given. 50 lakh rupees. 50 lakh. Clear hai? Now, what will be the next step? We are calculating capital gain. Next step क्या होएगा? Come on. Minus the cost of acquisition. Okay, cost of acquisition, which can also be if this land you was long term. अभी मैं बोल रहा हूं 100 years पुराना land तो has to be long term, no? It can also be index cost. What was the original cost of acquisition of the land? 10. But index cost will not be 10. Index cost will be higher. In your exam ka question, in your May 22 ki RTP ka that case study question, if you are solving and listening to my request, you will have to take actual cost price and actual indexation. मतलब multiply by the present day ka indexation, divide by purchase year ka indexation. But in the example, for the sake of simplicity, CBDT said we are assuming that the index cost is 15 lakh rupees. CBDT नो गवर्नमेंट ने दिया, मोदी जी का फैन है तो मोदी जी का फिगर 15 लाख रुपीस. सुनो, will 15 lakh be the index cost? Actually नहीं, you have to do the actual calculation. But whatever be the calculation, there is going to be one index cost which will give us the gain, no? Do we know the calculation of indexation? So CBDT said that I am not giving you circular to teach you explanation or to teach you or explain you how to calculate index cost. That you already know. I am assuming that my point here is to explain the calculation of 9B. So I am assuming what is the index cost? 15 lakh rupees. Original cost was 10. Assume ke after indexation it has become 15 lakh. So please tell me what is the capital gain? Kiska capital gain hai? Whose capital gain? For the firm. What is 9B? Gain of the firm taxable for the firm. Gain of the firm taxable for the firm. And what is 45(4)? Gain of the partner taxable for the firm. Gain of the partner taxable for the firm. मित्रों, याद आया क्या? Everyone? हाँ. So what is the capital gain? 35 lakh rupees. And on this capital gain, the firm will have some tax liability. What will be the tax liability on 35 lakhs for partnership firm? First 2 lakh 50 no tax, then 9 flat rate kitna 30 no partnership 20 mitro. Why? Because this is long term. Short term hota to we would have applied normal rate, and normal rate is 30%. But this tax liability will be under section 112 at a rate of 20%. So can I say 7 lakh rupees? $35 के ऊपर 7 lakh rupees, 20% tax. Whose gain we are calculating? Gain of the firm. Selling price will be the fair market value. Cost price will be actual. Index you have to actually do in your sum, but here index cost is given as an assumption. And 35 के capital gain के ऊपर 20%. When in real life you will pay tax, when in your exam ka sums you will calculate tax, will you stop at 7 lakh rupees? नहीं. You will give rebate, no? नहीं. तो surcharge 35 है इसलिए नो सरचार्ज. 50 क्रॉस होता तो सरचार्ज ना. हाँ, 1 crore तो नो सरचार्ज. But still there is going to be that one calculation which comes in all tax liabilities, that is, come on, 4% says. So can I say ultimately 7 lakh will not be your liability. 7 lakh plus 4%, 728 will be the tax liability of the firm. In your exam ka sum you have to calculate 728, but CBDT said that for the sake of explanation ignore the cess wala part. Just like for the sake of explanation convenience, did we assume index cost without calculating? Same thing we are doing for our tax liability also. Ignore cess. We all know that the firm has to pay 7 lakh plus 4%. But right now we are not here to explain tax calculation. We are here to explain 9B and 45(4) का joint application. उसके लिए this छोटा छोटा calculation which you all already know. For example, मतलब I am assuming that you all remember indexation का calculation. Can I assume that? हाँ. This part You know how to do? So they are saying we assume that you know this. That means in conclusion, can I say we have understood 9B ka calculation? Calculate the capital gain of the firm. Here you will take only asset ka value, you will not take money. 9B mein money does not come. Take index cost and on that gain you will calculate tax. Normally you will be paying cess also, but for explanation purposes we are ignoring cess. That's your step number 1, 9B ka calculation. Mitro, that is your step number 1, 9B ka calculation. When both sections get simultaneously invoked, 9B will apply first. Have we understood 9B? In that sum also you have to do 9B first. And if you have understood 9B, now what is going to be your step number 2? 45.4. This time we are going to calculate capital gain for whom? For partner who is leaving. Can I say partner C? But on this capital gain also, who will pay tax? Capital gain of C, taxable for the firm. Correct hai? Capital gain of C, taxable for the firm. Correct hai? What is this calculation? In all this chaos, 9B solve karte karte, do you still remember 45.4 ke bhul gaye? Bhul gaye to luko. Ye tha calculation. We are giving partner a few things for leaving the firm. That is his selling price minus whatever was his investment in the firm. That is the cost price. And that is the gain. Selling price is easy. Now, open the example in front of you. Is the example open? In 9B, we only took value of asset because 9B takes only capital asset and stock in trade. CBDT के example में only asset was given. And I purposely added the money part also. In our example, to our partner C, are we giving land and money, land and money, land and money? 9B का calculation will take what? Land, money, both. क्या लेगा? Land, money और both? Only land? Only land. 45.4 का calculation will take what? Land के money? Both. So can I say sale consideration will be the money that we are giving him, which in our example is 10, plus the fair market value of the asset that we are giving him. Which land we are giving him? Land U. वो 50. So can I say 60 lakh rupees is the selling price for the partner? Money plus asset, capital asset है इसलिए 45.4. Stock in trade होता तो only 9B is applicable, 45.4 is not applicable. Correct? Minus. How do we compute cost? What is the definition of cost of acquisition? What is the definition? Words में बोलो. What is the definition of cost of acquisition? Balance in capital account represented in any form. Capital account, current account, anything. Check the balance sheet and tell me what is the balance as per the balance sheet in the capital account. As per balance sheet kitna? 10 lakh rupees. So can I say before 9B calculation, the balance in C ka account is 10. Everybody is with me? Suno. If 9B was not there, only 45.4 was there, then it would have been very easy. We would have subtracted 10 lakh and khatam, tata, bye bye. Because both are being simultaneously invoked, this is the complication. So, can I say this? Am I right if I say this? That if you have to calculate only 9B, it's very easy. Itna easy ke index cost and yahan pe cess to they assumed ke you know. If you have to calculate only 45.4, take whatever we are giving him minus his balance. It is very easy. Problem kab arise hoga? When 9B is already invoked. If 9B is already invoked, has the firm already earned some gain before 45.4? So if the firm has some gain before 45.4, these balances will not remain the way they are right now. These balances will change because of 9B. We have to add the impact of the 9B calculation in our books of accounts. we have to add the impact of 9B in our books of accounts. Kya? Orally I will speak, then I will write down. Is 9B resulting in some gain to the firm? Is it actually earned gain ke only revaluation of your assets? Actually earned. वैसे there are 3 lands. Value of land S has also increased, value of land T has also increased. But we will take only the increase of land U because that is actually earned. Land S and land T ka increase so we have to ignore, no? Mitro, land S and land T ka increase we will ignore. But land U ka gain, is it an actual gain? So we have to credit that gain in our profit and loss account, which will effectively be credited in partner's capital account. What is that gain that we have earned on land U? Come on, ladies and gentlemen. Come on. What is the gain that we have earned in land U? सेस इग्नोर करके देना है रौनक, because that is what we have taken in 9B calculation. Priyanshu is saying 40. Priyanshu 40, इधर तो 35 आया था ना गेन. प्रथमेश said 35. प्रथमेश खड़े, he said 35. 2 प्रथमेश है ना क्लास में, he said 35. Priyanshu is saying 40. Priyanshu, can you care to explain how 40? Because अपना 9B का calculation has given us 35 का gain. Still you are saying that gain is 40. बोल भाई, बोलना भाई. Indexation का calculation can come only in tax computation. मित्रों, your books of accounts will reflect the profit as difference between book value and selling price. Book value and selling price. सुनो, indexation का benefit comes in tax computation. Books में what was the value of the land? 10. And we are transferring the land to the partner at a market value of 50. Books of accounts will show a gain of 40 only. If I make my profit and loss account के अंदर gain that will be credited will be 40. Because silly statement to make with you talented people, but I have to make this statement. Gain as per books of accounts and gain as per tax will not be same. Gain as per tax will have indexation, but gain as per books will have no indexation. Difference between book value and selling price. Book value and selling price. मतलब gain as per tax is different between selling price and index cost. But gain as per books will be selling price minus books का value of 10 lakh. Correct है? तो can I say 40 lakh will be credited in the profit and loss account? सुनो, this पूरा का पूरा will not be credited in C का account. 1/3 will go. 1/3 will go. But wait. This transfer of land U, is it resulting in some gain as per accounts? This 40 का amount? मित्रों, तो this transfer of land U is also bringing 7 lakhs on the debit side. बताओ कौन सा 7? The tax that we are paying. We are ignoring cess. सुनो, in your actual sums का calculation, in your actual real life का calculation, obviously you will take 7,28,000. But we are continuing our 9B का calculation. No, this is where our 9B का calculation stopped. So my question is, we have transferred our land to our partner. That has resulted in gain in tax also, books also. The gain in tax is calculated as per 9B and the tax is also calculated at 7 lakh as per 9B. Ignoring cess. Books of accounts will also show some profit, but the profit in books will be different from the profit in tax. So is this 40 ka credit clear? But while we take this 40 in the P&L account, because of this 40, will there be some tax liability on the firm? We have to record that tax liability also. And therefore, do you understand that what is the tax that we are paying on this gain? The tax will be 7 only recorded in books of accounts. That means, can I say the net gain that we are making because of 9B as per accounts? As per accounts, the gain will be what? 33. You agree how? 40 का gain credited and 7 का tax. अरे यार देखो, tax also if you are paying तो you have to record in your P&L account. तो 40 का gain credited, 7 का tax debited, and Priyanshu pointed it out एक second के अंदर. But are the other students also clear? Gain tax showing is 35, but accounts will show 40 का gain because accounts are interested in difference between book value and fair market value, मतलब selling price. Tax में भी take indexation, accounts में भी don't take indexation. So is 47 and the net credit of 33 clear? Now, complicated part is over. This requires no talent to understand that 33 will not be credited in C का account. Obviously, मित्रों, अरे 3 पार्टनर है ना, दिस इज प्रॉफिट एंड लॉस अकाउंट, ये क्या सी का अकाउंट थोड़ी है? तो 40 इज द गेन ऑफ द फर्म, 7 इज द टैक्स ऑफ द फर्म, तो 33 इज द नेट गेन ऑफ द फर्म. नो, whose capital gain we are calculating, whose computation is happening only for C. ये 10 लाख लिया कि 30 लाख लिया? What have you taken here? You are taking C का बैलेंस ना. तो क्या 33 का पूरा का, एक तो 33 का गेन इज क्लियर टू एवरीवन. विल 33 का पूरा गेन बी क्रेडिटेड टू सी का अकाउंट? तो डिड यू अंडरस्टैंड दिस पार्ट? दिस इज अ वेरी इजी पार्ट. दैट फाइनली लेडीज एंड जेंटलमैन, व्हाट इज द बैलेंस इन सी का कैपिटल अकाउंट आफ्टर 9B? अब डू यू अंडरस्टैंड व्हाई सीबीडीटी सेड फर्स्ट डू 9B then do 45(4), because 9B का calculation will change the capital balance and accordingly have an impact on 45(4). How 9B का calculation changed? The gain as per books has to be credited, the tax liability has to be debited, the net profit has to be recorded. And do you understand therefore why first 9B then 45(4)? Finally, what is the cost of acquisition as per 45(4)? 21, the revised capital balance. I have one question for you. Are we increasing capital balance of C by this net profit of 11 lakh? मतलब 40 का gain, 7 का tax, then profit sharing ratio. Are we increasing? Because land U का value, which was once upon a time 10 lakh, has now become 50. So we are increasing that. 40 का profit, सामने 7 का tax, 33 and then profit sharing ratio divided by 3. So like that these two lands का values have also increased, no? 10 has become 60 and 10 has become 40 respectively. So that also you increase and credit, no? Here change C का balance, no? वो नहीं करोगे. Why? Because ignore any revaluation. समझा? तो इसीलिए I was again and again asking you, land S and land T, their values have increased, but that is notional increase, it is revalued figures. But land U is not notional increase, it is actual profit. मजा आया मित्रों? मजा आया? एक्चुअल प्रॉफिट है. इट इज नॉट नोशनल प्रॉफिट, इट इज एक्चुअल प्रॉफिट. एवरीवन इज क्लियर? सो आर बी क्लियर व्हाट विल हैपन व्हेन बोथ सेक्शंस विल बी साइमल्टेनियसली इन्वोक्ड? फटाफट बोलोगे तो इट विल बी गुड फॉर बोथ ऑफ अस. Alone 9B is very easy, alone 45(4) is also easy. Complication comes when both sections happen together. Capital asset reconstitution. फटाफट बोलो. First what will we invoke? बोलो. First what will we invoke? 9B. 9B मतलब we will calculate gain of the firm and taxable for the firm only. FMV will be selling price, लेकिन खाली asset का, don't take money here. Indexation you have to calculate. In the CBDT का example they assumed 15 lakhs. You have to calculate. that will give you gain as per tax. Calculate tax liability as per tax provisions. If that is done, 9B is over. In your real calculation, you have to take cess also. Here, explanation convenience के लिए cess was ignored. Once 9B is over, now go to 45.4. 45.4 में, you have to take gain of the partner but taxable for the firm. Gain में, we will take selling price. यहाँ पे we will take money also and FMV also. Correct? Now go to cost. Cost is capital balance. Capital balance original. But because of the 9B का gain, the capital balance will change. कैसे change? The profit will be credited and the tax liability will be debited. But the profit as per tax nahi. The profit as per books. Difference between book value and fair market value. That profit is credited. Tax liability is debited. Net profit is profit of the firm. PSR also you have to remember. The profit sharing ratio ka credit will give us revised the capital balance of the partner. That will become cost. And finally, this cost will be subtracted. And if we have to find out apna final answer, what is the capital gains? 39 lakh. Gain earned by partner. Taxable for the firm. And in this entire discussion, the most complicated aspect was as per tax 35, but as per books 40, and the tax liability and that credit 33 divided by 3. This part, most complicated of all. Has everyone understood this complicated part? Everyone clear about step 1 9B? Step 2 45.4? At this stage, can I say we have understood 9B, we have understood 45.4 and also joint application? Everyone? But auntie to auntie hai. Bad news ye hai that we are not done as yet. There is going to be a step 3 also. Auntie to fir auntie hai. Step 3 will also apply. Before I give you calculation of step 3, like I did in 9B, like I did in 45.4, पहले logic बताया. Then we went to calculation, so it became easy for you to understand. Simultaneous application में भी I explained the logic that first calculate gain as per 9B, उसकी वजह से revise the capital balance for 45.4. पहले logic समझो. I have 2 questions for you. 2 questions. And both questions will be answered in my step number 3. Are you ready to listen to the 2 questions? Question 1. We have calculated the capital gain of 45.4, 39 lakhs. Have we? This capital gain is long term or short term? Do we need to answer that? Do we need to answer that? Yes. देखो 9B में it is not difficult because firm is transferring the land. What was the holding period of the land will decide capital gains, long term or short term. But what is 45.4? Partner ka stake in the firm. In lieu of that, we are giving him asset and money and computing this capital gain of 39 lakh. And by now we have understood the whole calculation also. This will be long term or short term. Question I am creating, answer I will only give. You understand the question is arising only in 45.4, not in 9B. Because 9B mein to whichever asset is transferred, you just check that. Mitro, are you understanding? What will be the nature of capital gain? And you know why we have to find out? Because long term gain hoga to different rate of tax will apply. Long term gain hoga to set off mein rules are different. Arey, you understand no what is the question now? Chaliye. Second question. And a more complicated question. This is the first gain where we made the firm pay tax. 9B. Second gain where we are making the firm only pay tax. Bhale gain was of the partner, but we are making the firm only pay tax. Bolo yes or no?
Yes, sir.
2 gains, both taxable for the firm. Whoever has earned them, ultimately tax liability on 35 lakhs and tax liability on 39 lakhs, both the tax has to be paid by the firm. Correct? So I have a controversial question here. My question is this. Sir, in 9B computation, is land ka value 50 lakhs included in the gain? Matlab in the selling price, if it is included, to gain mein it is included. क्या 9B includes the value of land? Yes बोलो या no बोलो? 9B includes क्या? 9B is value of land only, nothing else. In fact 45(4) has money. 9B तो includes only land, but 45(4) along with money, does it also include the value of land? Does this 60 include 50? And does this 50 include 50? Lol, include 50 क्या? This 50 is that land का value only. तो मेरा question ये है, is the firm being made to pay tax on the value of the land 50 lakh rupees twice? You did not notice all throughout the explanation, but now do you notice when both calculations will apply, the value of land will go in 9B also, and value of land will come in 45(4) also. Do you realize that? I repeat my question. 9B calculation, 45(4) calculation. Are both capital gains taxable for the firm? Whoever has earned, we know 45(4) earned by partner. But question is not who is earning. Question is who is paying tax on both gains? Firm. And does both gain ka computation include value of the land? So my question is, does this not become a case where firm is being made to pay tax on the value of the land twice? Ek ka double Anuradha. Yes. Is it not unfair to make the same assessee pay tax twice on the same value of land 50 lakh rupees? I am asking you. तुम बोलना मत सर, unilateral relief, same person same income getting taxed twice. Lol. Unilateral relief is foreign tax credit, residence and source. So obviously there will be no unilateral relief. So yes, we have an unanswered question. Okay, double tax is coming. How to avoid that? Is that an unanswered question? And second, the easy question. This capital gain is long term or short term? That is only for 45(4), not for 9B. 9B में तो nature of asset you have to check. Land was long term के short term. But 45(4) में it is partner का stake in the firm. You understand what I am saying? You understand what I am saying? Step 3 will answer both questions. Step 3 will answer that this gain is long term or short term, and also how to save the assessee from double tax. I give you an option. Supposingly you assessee, I government. You assessee, I government. Hi assessee. Bolo hi government. Today we are making you pay tax on this 39 lakhs. बराबर है? If someday in future, from your computation of income, if we allow to subtract you 39, if we allow you to subtract 39 from your computation, so can I say whatever gain we are making you pay tax today, one day we will subtract and we will cancel the effect of 39? Understand karo. You are paying tax on 35, which includes value of land. You are paying tax on 39 also, which also includes value of land. But future mein, if we allow you to subtract 39 from some capital gains, so can I say 39 added in income, 39 minus in income? Add and minus cancel against each other. So effectively we will take tax only on 35 from you. One day in the future, we will let you subtract this 45(4) ka capital gain from the computation of your income. Like a deduction. Deduction you understand? Today pay tax, tomorrow take deduction. Today pay tax, tomorrow take deduction. So will we end up cancelling 39 ka gain? Someday in future? I am asking you. तो फिर that problem will be solved, no? That double taxation वाला problem. Today we are paying tax on 35 lakhs under 9B and also on 39 lakhs under 45(4). 35 as well as 39 both include value of the same land U. That means the assessee is being made to pay double tax on the value of the same land. But one day in future, if this gain is allowed to be subtracted in your computation by making a deduction, that means the 39 that we have added today will be minused in future. That means 39 will cancel itself in future. So net में impact में we have taken tax only once on 35 lakh rupees. That is how we will eliminate that double taxation wala point. When it will happen, how it will happen, I will tell you. I am just telling you one day we will subtract 39. When it will be done, I will tell you. But you are understanding that the double tax ka impact will be cancelled if we allow you to take the deduction of 39 lakhs in future. Is that clear? Chaliye. When it will happen, the third and the last thing introduced by Auntie along with 9B and 45.4. Ladies and gentlemen, 2 years ago, 45.4 used to get over in 30 seconds. Transfer of capital asset by firm to partner equal to fair market value. Today we have consumed more than 2 hours. I hope you realize. Okay. Time, energy, time taken to complete batches, everything is increasing except pagar. Everything is increasing. Once upon a time, CA final ka batches which used to get over in 2 months, today are not getting over in 2.5 months also. All thanks to Auntie. बस इतना सा रिक्वेस्ट है आंटी के लिए. आंटी प्लीज मर जाओ ना, प्लीज, इतना सा रिक्वेस्ट. ओके, लिसन. स्टेप नंबर 3. आंटी सेज that go and check section 48. Section 48 is the section of computation of capital gain. ये जो computation we do know, sale minus cost, sale minus cost, sale minus cost. Where is this computation of capital gain given? 48. Okay. And go and check when you transferred your land U. What are your remaining capital assets? When you transferred your land U, do you have some remaining capital assets? Tell me the names of those capital assets. Land S and land T. Tell me what is the book value of these lands. 10 each. Tell me what is fair market value. Now in CBDT ka example, they had taken 50-50 for both. So confusion hota hai, isliye I took different amounts. What is the fair market value? 60 and 40. That means today's total value is 100. I want to ask you, what is the increase? What is the increase from book value to fair market value? What is the increase from book value to fair market value? Land S, 10 has become 60. You understand this increase? Land T, you understand this increase? Can I say what is the total increase? 80 lakhs. 80 lakhs, everyone with me? Now comes Auntie ka final provision. Auntie says, the capital gain that you have earned today under 45.4. Please be with me. Last complicated provision. We are soon getting done. Not with today's lecture. The capital gain that we have computed in 45.4, 39 lakhs, shall be apportioned to your remaining capital assets in their ratio of increase from book value to fair market value. Matlab, we have remaining capital assets called land S and land T. Land S ka value has increased by 50 lakhs and land T ka value has increased. I am asking you to check the increase by 30 lakhs. Can I say the ratio of increase is 5/8 and 3/8? 5/8 and 3/8. We want to find out the increase from book value to fair market value. Can you give me that ratio? Do you observe it is 5/8 and 3/8? So the capital gain that you have earned today first apportion in the ratio of increase to the respective lands. मतलब land S को how much gain we will apportion? Increase का ratio 5/8, 50/80 is same as 5/8. I hope you understand. And land T. Is this thing clear? What to do with this I will tell you, but is this thing clear? So tell me, what is the amount out of 39 lakhs that we apportion to land S? Lakhs में है, you can't round off. Lakhs cannot be rounded off. 24.375 तुम लोग कुछ करो ही मत, मैं सब करके everything I only do. 24.375 correct है? And land T 13 point. करना है नहीं करना है? 14.625. What have we done? We have apportioned our 45.4 का gain to our remaining capital assets. Remaining capital asset कौन सा? S and T. In which ratio? In their increase from book value to fair market value. Accordingly, we are getting these two gain amounts. Now go and check the present status of land S and land T. Present status matlab whether today matlab which day? The day when we did reconstitution. Is it a long term asset or a short term asset? Check karo jaake. Check karo. Okay? Check karo. It is possible that both are long term. It is possible both are short term. It is possible that this is long term capital asset because you are holding since many years, but this is short term capital asset you purchased last year only, but still the value increased from 10 lakh to 40 lakhs. Is it possible? Is it possible that this asset is long term, this asset is short term? We are checking our balance remaining capital assets after our land due went away. And this data obviously question will give you which land was acquired when. Accordingly, do you find out the status of remaining capital assets? अब बताओ, land S, as per the data given in the question, what is its present day status? Long term के short term? Land S. Long term. So this part will be taxed as long term capital gains. And land T का present day status is short term. So this part will be taxed as short term capital gain. So first question, what is the gain that we have to tax under 45.4? 39 lakh rupees. You remember I asked you a question whether this capital gain will be taken as long term or short term. Now I give you the answer. Now I give you the answer. See the explanation here and see the answer. When 45.4 is applicable, go and check the remaining capital assets. Wait. Here you can as a student ask me a doubt and I will clarify that only. Sir, if there is no remaining capital asset, I know you are going to ask that. एक बात बताओ, गधेड़ा लोग, no remaining capital asset ना, मतलब dissolution हुआ. मतलब what are you trying to say? Business is going on but all the capital assets are given to partners. बोला तुम रखो, हम ऐसे बिना asset के we will do business. Artist है यार तुम तो. You understand? If all capital assets will go away, practically it will be dissolution, no? And do you understand if it is dissolution, तो 9B is not applicable, 45.4 is not applicable. फिर तो 9B का calculation had to be done and fair market value was taxable for the firm, only one capital gain. समझा क्या? समझा क्या? तो do not take the assumption के sir, what if all assets are there? मतलब there is no remaining capital asset. Okay? You can be very wild. If you assume, sir, supposingly we are doing reconstitution and we give away all our assets to our partners. And now we are operating on rented assets. बहुत wild है यार तुम. क्या assumption ढूंढ के लाया? But then auntie has added one line, no, in the provision which I told you long ago. If there is any difficulty in implementation or interpretation, I will release more circulars. So please do not tell auntie that auntie, ये वाला सिचुएशन अभी तक आपने क्लैरिफाई नहीं किया that what will happen if there is no asset. Auntie is assuming no asset मतलब dissolution. Dissolution मतलब 9B, 45(4) is not applicable. Do not create this situation and tell auntie, all assets given, but still firm is continuing on rented assets. Because if you tell her, she will bring a new circular. Auntie as of now is assuming that all assets given, मतलब dissolution है, तो 45(4) लगेगा ही नहीं. इसीलिए she has not clarified that situation. She has assumed that if one asset is given to the partner, you have remaining assets. And by the way, all this was also clarified in the circular. You know what was written in the budget, in the Finance Act? बताता हूं, इधर आओ. बस इतना ही लिखा था. I hope you remember this. We finished 1.5 hours ago. All this that we are discussing is given in the circular. What does the circular say? The capital gain of 45(4) will be apportioned to the remaining capital assets. So first of all, we are assuming that remaining capital asset hai. Everything is not given. Because everything is given, matlab dissolution, is what auntie said. And don't be very wild in your imagination, nahi to auntie will bring more circulars. So are we assuming we have remaining assets? Yes. We have to apportion. In what ratio? Book value के ratio में नहीं, FMV के ratio में नहीं. Increase from book value to FMV. Increase from book value to FMV. Is that understood? 5/8, 3/8. And accordingly you will identify what is long-term capital gain, what is short-term capital gain. Matlab, have I answered the first question that this gain will be long-term or short-term? Now I am giving you the answer. The gain will be apportioned to the remaining assets in the ratio of increase from book value to fair market value. And based on what is apportioned to individual asset, on the basis of that asset ka present day status, decide whether long-term or short-term. Is that clear? Everyone? Everyone? What if there is a decrease from book value to fair market value? There is no increase, so you will not apportion anything. You have to apportion only to those assets where there is increase in value. But once again, unfortunately, circular has not clarified this also. They just said assume, they will assume that the fair market value decrease hona is a very, very rare case. Capital assets ka special. Okay. But if it is, then don't apportion any gain to such assets. Don't apportion gain to assets jiska value is reduced. Increase to those assets jiska value has increased. And accordingly decide long-term gain or short-term gain. So have I answered first question? Whether 45(4) ka gain will be long-term or short-term? Can I conclude in one line? It will depend on the remaining assets. And in what proportion is that also clear? Last question. Same income getting taxed twice. I told you, 39 will be subtracted in future. I told you, 39 will be subtracted in future. Okay. So no. In future, one day, is it possible that there is going to be sale of land S or sale of land T? Those assets which you are present day mein you are holding and inko you have apportioned the gain. Is it possible that one day you will sell them? Therefore, will there be capital gains on these lands? Land S ka capital gain will be calculated, land T ka capital gain will be calculated. Whenever we sell them in future, after 1 year, 2 years, 5 years, 10 years, will we sell them? Hello. What will be the sale consideration? Actual. What will be the cost of acquisition? Actual. And along with the cost of acquisition, please pay attention, we will also subtract how much gain we apportion to land S today. 24.375. Subtract that in future. How much gain we apportion to land T today in the proportion of increase in value? 14.625. Subtract that. My question is, in computing taxable capital gain of land S and land T, are we subtracting 39 lakh rupees in future? So today, did I tell you that today we are making you pay tax, but tomorrow we will give you deduction? Today, we are making you pay tax on 39 lakhs, but one day we will give you deduction. And where will we give you deduction? Whichever asset we apportion, whichever gain, Do you understand this apportionment wala calculation? Whichever asset we apportioned, whichever gain, in that proportion we will subtract from that asset ka gain in future whenever that asset is sold. And that, ladies and gentlemen, is the last step of 9B, 45(4) and 48 ka combo. I'll quickly revise 9B, 45(4) and 48 ka combo. 9B, 2 assets, capital assets, stock in trade, 2 transferors, firm or partner, 2 assets. Suno, if I am revising and you all are not interested and putting your videos off, now I will throw you out of the class. I can remove people from this also. यहाँ पे कॉमेडी नहीं चल रहा है. Per lecture permission is of 5 minutes. कोई कोई का नाटक बहुत ज्यादा हो रहा है. Means every 5 minutes you are going. You will be thrown out. पूरे लेक्चर में 5 minutes का परमिशन है. हर 10 minutes में 5 minutes का परमिशन नहीं है. And selected students are regular defaulters in this. I am revising. If you are not interested, then I will go to the next provision. मेरा भी time consume हो रहा है. Nonsense. 2 assets, capital assets, stock in trade, 2 transferors, firm or partner, 2 receivers, partner or firm or AOP, 2 receivers, partner or member respectively. Fair market value will be selling price, cost will be actual, capital gain or PGBP will be calculated. 45(4) में gain will be of the partner but taxable for the firm. Gain में selling price will make all the money and capital asset का value, cost will be actual, cost will be as per tax. Index cost भी हो सकता है. Correct or no? That cost or index cost was in 9B ka calculation, but in 45(4), what is the cost price? The balance in the capital account. If it is gain, we will take tax from the firm, not from the partner. From the firm. Loss hai to ignore. Balance in capital account can be in any form. And revaluation of any asset, yeah, self-generated assets will be ignored for recomputation of balance in capital account. That's 45(4). But joint learning. Joint learning mein first we will apply 9B. 9B mein we will calculate gain of the firm. Gain of the firm will be calculated as per tax provisions. Matlab fair market value will be selling price. Index cost we have to take. Actual calculation has to do, not assumed calculation. Actual index cost, actual capital gain. उस capital gain के ऊपर actual tax liability will be paid by the firm. So 9B is over. But with this, there will be impact on 45(4) because 45(4) में cost price is balance in partner's capital account. That balance will undergo change because of 9B. Because of 9B, there is some gain on an asset and there is some tax liability. This gain and tax has to be computed as per books, not the gain as per tax that you took in 9B, but as per books. So credit the gain, debit the tax, net profit in partner's capital account in profit sharing ratio. New capital balance mila. Selling price will be money that we gave him and value of asset minus new capital balance. That will be capital gains for 45(4) purposes. Now this capital gain will be long term or short term. Go and check the remaining capital assets with you. Their increase in value from book value to fair market value, us ratio mein apportion this gain. And on the basis of individual assets, yahan pe we had 2 assets, you can have multiple assets. Apportion that. And you decide long term, short term, long term, short term. And whenever in future, now you will sell these assets. So whatever we have apportioned them, we will subtract because otherwise we will end up paying tax on the fair market value twice. So we will give this subtraction and solve that problem also. And this gain is long term or short term. That problem is also solved. And that answer is staying in this apportionment here. This is also that question that they asked in the May 22 RTP. Addition khali kitna tha malum hai? They had 3 lands. And what they did was, 1 land was given to the outgoing partner. Remaining 2 lands ka value increased. And plus the firm said that we also are valuing our goodwill. Matlab, there was 1 land, 2nd land, and the firm took goodwill. Earlier it was not there in books of accounts. But now we are taking 50 ka goodwill. That means, do you understand? Goodwill is also increasing by 50 and the total is 130. Dekho, in partner ka capital account ka balance computation for 45(4), we will not take the goodwill. You understand? This calculation is different from this calculation. First question is here. ये जो revaluation वाला part है. Can the firm do goodwill? Yes, we will not take it for capital account. But can you do goodwill? Yes. So, before the transaction, the value of goodwill in the books was 0. But now we are recording goodwill. In this example, we took 150. Yeah, in my new example, I am taking 50. Are we recording goodwill? Because of this new goodwill, will we change partner's capital account for 45(4) ka cost of acquisition? That is not allowed. But is this an increase from book value to fair market value? Book value was earlier 0. Now we are recording our goodwill. So what is the total increase? Now it won't be 80. Obviously you understand the total will be 130 and the ratio will be 5/13, 3/13 and 5/13 respectively. So this apportionment that we have done, no, to land S, land T, साथ में apportion some capital gain to the goodwill also. और future में when you sell land S, when you sell land T, you will also sell your goodwill. उसके अंदर उसका proportion you will minus. मतलब calculation is same as what we have studied here. Extra explanation क्या है? If there is any goodwill or self-generated asset जिसका value was earlier 0 in accounts, but now we are taking some value, will that increase in value be taken for 45(4) का cost of acquisition? नहीं. But is it an increase from book value to fair market value? Yes. So for 48 का calculation we will take it, 45(4) का calculation we will not take it. For apportionment purposes we will take it, but for 45(4) we will not increase the cost of acquisition for 45(4) purposes. And of course, if there is a third asset, you understand, जितना ज्यादा remaining assets, उतना ज्यादा proportion will change, no? Because we have to apportion the gain to every asset individually. So land S का increase is 50, land T का increase is 30, goodwill also if you assume to increase is 50, so total increase will become 130. So you have to apportion in the ratio of 5/13, 3/13, 5/13 again. That is how your apportionment will take place. And this is that question in the May 22 RTP on 9B and 45(4) का joint study